I'm Wade Cook. I'm the author of The Wall Street Money Machine, Stock Market Miracles, and Bear Market Baloney. Thank you for joining me on this video presentation. I'd like to welcome you to my office, actually my office away from my office. I mean, who else has a podium in an office? Well, we've done this so I can do a presentation to show you how you can make more money in the stock market, how you can literally turn the stock market into a business. Now, this seminar is about you and what you can do to make more money. Before we get started, let's ask some questions. Are you making a lot of money right now? Do you need extra income? If you were to quit your job, do you have enough money coming in to live on? And are you getting ready for a great retirement? I mean, after all, 90% of all of Americans have to substantially cut down their standard of living when they retire. Are you in that boat? Would you like to learn how to make more money? And would you like to do it as a business in your own home, in your back bedroom, or in your office? Look, I see a lot of people toiling away trying to make a living. And if they would just spend a few minutes a day learning and applying these strategies, they could make a lot of extra money that would allow them, or you, to quit their jobs, to spend more time with their families, to give more money to their church. Well, it all comes down to income. Cash flow and more income. Now, when I say make money in the market, I mean actual cash money, where you can call your stockbroker and say, I need a check. Give me $3,200. I have some bills to pay, and you can go pick up a check for them, and pay your bills. When I talk about making money, I'm not talking about stocks or mutual funds that have gone up in value a little. I'm talking about actual cash flow money. Well, in order for you to understand this whole process, I need to explain to you my history. Now, I'm not going to go into detail, but just a brief history of where I come from. I was a cab driver in Tacoma, Washington. People think I'm joking about that, but I was car number 22 yellow cab. I was selling life insurance. I was teaching early morning church class. I was doing a lot of things trying to pay the bills. Are you there? As a matter of fact, most of you watching right now are too busy to get rich. You're so busy doing mundane stuff that you don't have any time to make any kind of serious money whatsoever. And that was me. I was so busy trying to pay the bills and make a living that I did not spend the time necessary and learn the things necessary to get wealthy. As a matter of fact, I'm going to make a very brazen statement, and I don't mean to step on any toes by this statement, but most of you watching right now are not rich simply because you don't deserve it. You don't deserve it. What have you done? What price have you paid? What experiences have you gained? What knowledge have you gained that will qualify you to get rich? Well, as we go through today, I hope that this video presentation will be a stepping stone in the right direction to help you get on the road to wealth so that you can make a lot of money and then keep a lot of what you're making, or most of what you're making. So we're going to go through my brief history. I was down there driving this cab. I learned about real estate. Oh, I got so excited about real estate, but I didn't have any money. Had to borrow $500 from my father, bought a little rental house, bought another one, drove the taxi extra weekends to get money to paint a house and to put on a new roof. And I was beating that cab to death trying to make a living and to do this real estate. They made real estate sound so easy. Well, I ended up having 9 rental properties, and I couldn't pay the bills. I ended up selling one of my properties out of desperation just to get some money to come in, and I carried back a contract on that property, which means that I became the bank. I financed the property for the person that I was selling it to. Well, that was kind of interesting because I had all my down payment back and I was able to go do it again. So I bought and sold properties rather than bought them and rented them. And this buying and selling, what I call the real estate money machine, and now my book, Wall Street Money Machine, it's all about the same thing, about generating income, generating cash flow. So I wrote a book at that time called Real Estate Money Machine. I mean, I was able to retire at the age of 29. And a lot of people said, we don't know very many 29-year-olds that are retired. Please write us a book. So I wrote Real Estate Money Machine, now Real Estate for Real People, How to Pick Up Foreclosures, Cook's book on creative real estate, and one called 101 Ways to Buy Real Estate Without Cash. And these books, by the way, are available in bookstores everywhere. But my point right now is that I learned a lesson, that the money is in the meter drop. Now, that's easy to say, so let me explain that. As a cab driver, I learned that instead of trying to get one big run to SeaTac Airport, which was like a $35 run from Tacoma, why not take the $2 runs, the $3 runs, the $4 runs? Just get that cab moving. See, because every time somebody gets in the taxi, it was $1.80. You pull, well, nowadays they just push a button. But back then we pulled the meter down, and it was $1.50 and $1.80 just to get in the taxi, whether it went anywhere or not. So you see, by the end of the day, if I would have 30, 40, 50 runs at the end of a day, I would have whatever the fare was, plus that $1.50, $1.80 on the meter drop. The money is in the meter drop. Now, I know that that's really hard for a lot of people to understand because a lot of people are buying that $2 stock hoping that it goes to 100. They're buying a piece of real estate for $100,000 and hoping it grows to be worth millions. And I differ from that. My strategy is to buy and sell and make millions of dollars, but in a whole bunch of bite-sized pieces. Think about it. McDonald's does not make all of its money every year selling one big gigantic hamburger. They make their money by selling billions of little ones. Well, that's what I think. That's the message that I have, is to make money in a whole bunch of bite-sized pieces. Now, as we go through rolling stock and options on stock splits and things that we're going to cover here today, you'll see that I agree that the money is in the meter drop. I did it in real estate. I do it today in the stock market. To make money a whole bunch of ways on a whole bunch of small plays, not waiting for that killing, not waiting for that one big deal. Now, as I go through these strategies, I hope you realize that it is about income. Now, there are three reasons why anybody would invest in the stock market or real estate, or really even to own their own business. The three reasons are cash flow, tax write-offs, and growth. Now, the reason real estate has been so popular, it's been such a great form of investment, because with real estate you can get all three of these at the same time. And with real estate, you don't need a lot of money to get started. You can buy real estate with small down payments. Now, in the stock market, it's a little bit different. In the stock market, you would buy one type of stock for cash flow. You would buy another type of stock for the tax write-offs, like Section 29 tax credit stocks and things like that. And you would buy other stocks, like bottom fishing stocks, for growth, something for down the road. But cash flow, tax write-offs, and growth, what do you need? Which one of those three should you go after? Well, obviously, the answer is cash flow. And it's cash flow today and cash flow tomorrow. Let me ask you another question. How many of you right now have your own business? If you own your own business and you as a business owner don't go to work, when will your income stop? Well, by the way, across the board in America, the income stops in about 2.5 to 4 weeks in the average small business. If you work for someone else and you don't go to work, when will your income stop? Next paycheck? Right away? You see, you've all heard the term income-producing asset. For most of you watching right now, you're it. You are your only income-producing asset. And if your asset doesn't go to work, there's no income. Now, my seminars, my books, everything that I write, everything that I teach is about helping people to build up a different grouping of assets that will spin off the income, will produce the income that they need to live on. So now what's more important, assets or income? What lets you go fishing? What lets you spend time with your kids? It is income. Now, next question. Can you have income without assets? The answer is no. Somebody, something has to be producing the income. So you have to have some assets producing income. Now, another question. Can you, though, have assets without income? And the answer there is yes. And far too many of you have far too many of those. You have all kinds of things that don't mean anything in terms of being able to go fishing or spend more time with your kids or travel or go back to college and do the things that you really want to do. Again, today it's about building up income. So we're going to create a grouping of assets that will produce the income that you need to live on. Well, you know, I'm very wealthy today. Very, very wealthy. I've been blessed beyond my wildest dreams. I've made more money and I've had more blessings in my life than I could ever have dreamed about. But it hasn't always been this way. A long time ago, I was not wealthy. I made my first fortune in real estate, buying and selling those houses. I would buy a house for $60,000 and sell it for $70,000. And I had money coming in and money going out. I'd make $100 a month. And after I did a bunch of those, I was able to retire at the age of 29. Now, something happened. Something very dramatic happened. You see, I lost a lot of that money. Matter of fact, I went down the tubes. I don't know if you can relate to this, but I was worth several $1 million and I saw it all crumble away. You see, the same set of skills that it takes to build up a fortune is not the same set of skills that it takes to keep and manage and protect that fortune. Well, I didn't know that. You see, I had all these properties and it started to crumble. The real estate industry in the mid-'80s went down the tubes and I really lost a lot of money. And not only did I lose a lot of money, not in my real estate so much, but the seminar business. I was so entrenched in the seminar business at that time, and it went down the tubes. Well, I don't know if you can relate, but I lost so much that I couldn't even hardly pay the bills. I had to let 35 employees go. Can you relate to losing your car? Having to hawk all your men's jewelry so I could get money to pay the rent. And it was so bad. And then I said, you know, I've got to make some money. So I went to a Burger King. There was one out on, I was living in Arizona at the time. There was one out on Thunderbird and Scottsdale Road, and it said, you know, get a job here and be an assistant manager trainee. And it was $26,000 a year. Now, do you realize what it takes to be down from like a couple $1 million down almost $200,000 in debt? And then to look at supporting a wife and a couple of kids and on a job at $26,000 a year. But he told me if I worked really hard in 9 months, I could get up to $29,000 a year. Well, it was almost impossible. I called different people. I was going to go start doing real estate seminars again or start doing real estate deals. And finally I talked to a stockbroker, and he said, Wade, I want you to come in and I want to show you a strategy that I'm employing. I want to show you, because see, what I told him was, Ray, I need some cash, and I need cash now. I don't need cash in 5 or 6 months. I need cash now to pay the bills. Now, I had $2,000 in an IRA, $3,000 that was owed to me from another person, and I went into his office that day, and I said, show me how to make some money. He said, well, Wade, I want you to do this stock. It's Motorola. Back then, Motorola was trading around $50. I want you to buy Motorola stock at 50, and which I did. I could barely scrape together $5,000, and the $5,000, I bought 100 shares, which equals $5,000. Now he said, put in an order to sell this stock at $60 a share, which I did. Now those of you that have brokerage accounts know that you can put an order in to sell the stock and go to Hawaii. You could take off. It's a GTC, or a good till canceled order. Well, sure enough, about 5, 6 weeks later, the stock hit $60 a share, and the computer triggered a sell. I had $6,000. Even after commissions, $50 here and $40 there, I had $910 left. Now I wish I could have left that money there, but I had to say, get me a check. I had groceries to buy. I had a family to support. I had to go pick up that $910. And then he said, now I want you to do it again. Buy it again at 50. So when it got down to 50, the computer triggered a purchase, and there I had now. I bought another 100 shares, and when the stock got back up to 60, I sold it again. And when it got back down to 50, I bought it again. Now, once in a while, when it got up to 60, it would go to $61 or $62 a share. And then you kind of miss out on that extra $1 or $2 for selling it at 60. And one time, by the way, when it got down to 50, it went down to 49 and to 48. Oh, I wish I would have had more money, because I would have bought some more at that time. Now, this is what I call rolling stock. I'm going to put my 2 pens here so you can see this. If you go into your stockbrokers and you say, I want to do this rolling stock thing by Wade Cook. You know, he's got it in his book, Wall Street Money Machine. Your stockbroker, they call it channeling. And if you use the word rolling stock, they won't know what it means, because, see, if you look up rolling stock in the stock market dictionary, it says livestock transported on the railway systems of America. I mean, that's their idea of rolling stock. Well, my idea of rolling stock is a stock that rolls up and rolls down and rolls up and rolls down. This is called rolling stock. Now think about this. If every month or two you could take $5,000 and turn it into $6,000 and make $1,000 profit out, you know, before your commissions, that would be a nice living. Well, I thought I'd hit the mother lode. Wow, what an incredible way to make money. And I could support my family almost on this if I could get a little bit more money and get it working in this rolling stock method. I happened to visit a movie theater. It's been changed now, so I won't use the name of it, but there was a little movie theater that was publicly traded. It was a Canadian company, and it was trading at around $2.50. Well, I bought it when it was at $3. And I didn't buy it to do a rolling stock, but I bought the stock at $3 a share. Then it went right down to 2.50. I said, oh, here I go again, buying a stock that's losing money. But then I noticed that it went up to 3.5. And then it would go back down to, say, 2.5. And it would go back up to 3.5. And it would go back down to 2.5. And sometimes 2.25, sometimes 2 5/8. Then it would go back up to 3 3/4. Once in a while, it would even go back up to $4, once in a while. Well, as soon as I saw this pattern, I watched it for about 6 months. So I jumped in, and I started buying the stock every time it got down around 2.5 or 2 1/4. Now think about this. Let's buy 1,000 shares. A lot of you could get started with $2,500, and if you don't even have $2,500, maybe you only have $500 or $1,000. It's tough to make money, by the way, in the stock market. I really think that you need a minimum of, like, say, $1,200 to get started. But 1,000 shares at $2.50 would be $2,500. And then when the stock rolls up to 3.5, you sell it. Now you have $3,500. You have $1,000. There you go. You make $1,000 after commissions, about $900, and you buy it again at 2.5 and 3.5, and they just keep rolling like this. Now, usually a stock will roll for 6 or 7 or 8 months, and then may establish a new rolling pattern. All right. Now, I would like to explain to you some rules that govern this. And before I talk about rules, the rules governing rolling stock, I want to share with you the whole idea about formulas and rules, and what it means to me when I say, as a business. Treat the stock market as a business. As I do radio and TV talk shows around the country, I've done over 2,000 of them now, I mentioned that phrase, that we're going to treat the stock market like a business, and I'm amazed, by the way, that people don't get it. I'm amazed that, see, the person doing the interview with me will say, well, what does that mean? What does that mean doing rolling stock? Or what does that mean treating it like a business? Treating it like a business. What does that mean? Well, I'm flabbergasted that people don't understand that. In a business, you buy wholesale and you sell retail. You're buying and selling, and you're only buying for the sole purpose of selling. You've got to sell to make the money. You put the emphasis on selling. All of your activities is geared towards selling, not towards buying. Traditionally now in the stock market, if you go back the last 30, 40, 50 years, all the seminars being taught, all the brokerage houses that teach stock market type seminars are always about buy and hold. Don't get me wrong, I think that's a wonderful, wonderful, great strategy. And it has its place. But a lot of you, remember, from our beginning, want more cash flow. The growth is nice to have down the road, but you need cash now, and that's what I'm getting at. Cash now, cash flow now, that you can get money and pay your bills. So as a business, to me, means that you're going to buy so that you have something to sell. Think this through with me. Let's say that you had a convenience store, a 7-Eleven type store down on the corner. Do you imagine going to a warehouse where they have pepperoni sticks and potato chips and all these things, and you're walking through there, and then you're saying, wow, I need to get some of those pepperoni sticks, potato chips, Doritos, I want all these things, and I'm going to keep them until I retire. See, you would never do that. Why are you buying pepperoni sticks and Doritos? You're buying them to resell. You see the point? Put the emphasis on selling. You would never buy food to hold for the long term. With small parts of your money, you may want to take it and do this rolling stock and some of my other more aggressive strategies in generating income so that you can, again, pay the bills, give more to your church. All right, rules now, formulas. The other question comes up that I get all the time from people on radio shows is, Wade, why are you different? How are you different than other people? Well, it's pretty obvious that I put the emphasis on cash flow. While they may be putting the emphasis on growth, I'm putting the emphasis on income, generating income. How are you different? Well, I'm different because I really don't care about a particular stock. You see, when you go to a stockbrokers type seminar, they'll be up there touting in this mutual fund or this stock, and they're trying to get you to buy into their investment du jour, their investment of the day. They want you to buy that. I don't care. What I want is a formula that repetitiously and predictably makes money. Do you? You see, most of my strategies are designed to not lose money. I just hate losing money. I may have 18 trades in a row where I've made good money, and if I have one bad one where I lost $600 or $6,000, I'll go home and my wife said, hold it, you can't come in here, you can't affect the kids this way. You know, get over your anger. I mean, I hate losing money. Do you? So if you don't like losing money, if you like making lots of money, then come with me as I go through this. But you've got to learn the rules. You've got to learn the formulas or the strat. Call it what you want. A formula, a system, a strategy. Call it what you want. I'm going to use the word formula today. There are 3 rules in regards to rolling stock. Now remember, you have a stock that's at 2.5 and it goes up to 3.5 and it keeps rolling. And you establish a pattern. I'm going to show you some charts of some of them in just a minute. But I want you to think about something here before we get into the rules. See, everybody wants to own this stock while it's going up. Everybody wants to own it here, but nobody wants to own it here. So another way of looking at rolling stock is to continually own stocks that are going up, but then don't own them when they're going down. What you have to do is check out a chart to look and see where the roll pattern is, where the bottom is. And by the way, this is called support and this is called resistance. You see, the stock market is either going up, it's going down, or it's going sideways. Now it's stock. A stock within the stock market is either going up, it's going down, or it's going sideways. Well, this last little while, we've had such an erratic market, such a crazy market. One day the market's down 300, it takes a week to climb back up, and then it's up 100. And then it goes back down 150 points. I've even seen it recently where it's here on the West Coast, it starts trading at 6:30. And all of a sudden it's down 100 points, but then at 7:15 it's up 119 points. And then at 10 o'clock in the morning it's back down 19, and then it's up 200 within 2 or 3 hours. What a crazy market. How do we learn how to make money in this crazy market? And I'll share some ideas with you right now. You're learning one here, buy on dip. So let's go through the 3 rules that govern rolling stock. Rule number 1, you know your exit before you ever go in the entrance. This is so hard for people to understand. When they say, well, how do I know when to get out? Well, you know when to get out when you ask the question or can answer the question, why did you buy? See, you're not buying a stock at 2.5 hoping that it goes to $20, $50, or $100. You're buying a stock at 2.5 hoping that it goes to 3.5. So you can sell it, make your profit, and wait for it to go back down to 2.5 again. You know your exit. By the way, this is not just a good strategy for rolling stock. This is a good strategy for every strategy that I'm going to talk about here today. It is to know your exit. Know exactly why you bought something and be happy with that. Be happy with your profits. Strategy number 2 is to don't get greedy. This is very important to me in this one here, and I'll tell you where it has its genesis. It has its genesis, this whole strategy, in the Bible. I was doing my real estate deals, and I was buying a house at $70,000, and it was worth like 95 or 100 if it was all fixed up, and I was trying to sell it for the 95 or 100. And one day I went to a religious bookstore, and I had some tapes of the Old Testament. Now this is back, by the way, when we didn't have cassette players in the cars. We had to put one in the cigarette lighter and put the cassette player, have batteries on the seat with a cassette player. And all of a sudden it got into Leviticus and in Deuteronomy, and it was just going along talking about principles out of the Bible, and it said, "Thou shalt not glean the field." Boy, that just hit me like a ton of bricks. Thou shalt not glean the field. See, you can't go in there and take everything. You go in and pick the wheat or the corn or whatever the first time, but you can't go back and take everything out of there. So I started thinking, why don't I apply that principle here in my real estate business? Instead of buying a house at 70 and trying to sell it for 95 all fixed up, why don't I buy it at 70 and sell it to someone else for 80 or 82? Let's leave some of the profits there. Let someone else have some of the profits in this property. And I got to tell you, my business just took off and flew because of that. Instead of buying one house every 3 or 4 months and selling it for $95,000 and making 20 or 30,000 bucks in 2 or 3 or 4 months, I started buying them at 70, selling them at 80, buying them at 40, selling them at 50. I started making a little bit of money, and I was doing sometimes 4, 5, and 6 houses a month. Well, tell me, would you rather have 6 times $10,000 in 1 month, or 1 times $20,000 in 2, 3, or 4, or 5 months? You see the point? So don't get greedy. Thou shalt not glean the field. The same thing happens in rolling stock. You see, in rolling stock, you have a situation where if you were to wait for this stock once in a while to get up to 4, wait for this one to get up to 4, it might not ever get there. I think a story would be appropriate to prove this point. I'd like to explain to you the Wall Street Workshop. Now, I'll tell you more about it later on in this video presentation, but the Wall Street Workshop is just simply an awesome class. It's not a seminar, it's really a workshop. Can you imagine now coming in and looking over the shoulders of me and my team Wall Street? The instructors are out teaching these Wall Street Workshops all around the country. You come and have an experiential learning formatted seminar. You know, a lot of people don't know what that means. You know, sometimes when you're trying to explain what something is, you use a comparison. It's kind of like this, or it's kind of like, it tastes like chicken. Well, in this example here, there's no comparison. I'd like to say we have the best course in all of America, but I look around and there's nobody in second place. The Wall Street Workshop is a course designed to do the deals. We either do them what we call real trades or simu-trades, simulated trades, or practice trades, paper trades. Now, you come into class with maybe 60 people, 80 people or whatever, and there's an instructor or 2 there. We have up in front of the Wall Street Workshop 2 different technician over here and cameras like television screens, and then maybe in the back, if the class is really big, some more television screens, so you can see the charts and diagrams. We teach 11 different strategies there, and here's the format that we use. The instructor will stand in front of the class and he'll spend 15 to 30 minutes explaining the strategy or the formula, going through the details of it. But then, more importantly, that's step 1. Step 2 is that we'll show them how to do it. We get stockbrokers on the phone or our trading department, we get live quotes, real deals, and we get the information out in a way that we can show people how to do that kind of formula, that kind of transaction. And then third, more importantly, we excuse the class. And the people go out either on their cell phones or in the hotel lobbies, and they'll call their stockbrokers or whoever and do the transactions. They'll either paper trade them or do real trades. You see, it's a live, experiential learning class. Now, you know you learn the best from experience. The problem is that experience is very expensive. And so why not come and learn through the eyes of someone else? Why not come and share? So that's what the Wall Street Workshop is all about. It is a workshop. Roll up your sleeves, get to work, learn how to make money with these 11 strategies. Now, let me tell you what happened with Kirk there at the class. There was a gentleman sitting right over here, kind of close to me, and I was talking about this movie company, and I had mentioned that I had done it about 15 times, you know, the 2.5, 3.5, 2.5, 3.5. And he came in, and he said to me a little bit later, he said, "Wade, there's no way." He came in with a chart like this, and you've seen these charts before. I'll show you a couple in just a minute. And every now and then, so the 2.5, 3.5, the stock would spike up, and it would spike up to like $4, like every 6 months. And he had a whole 4-year chart on this thing. And I said, Kirk, you missed the whole point. See, you're thinking that I'm selling it up the $4 range. And I looked at the rest of the class and I said, what did we say, everyone? What was the roll range? And everybody shouted out, 2.5 to 3.5. And I said, go back home. Take your chart and figure out how many times this stock has gone from 250 up to 350. Or that it's gone from, say, 2.25 even up to, say, $3. How many times has it gone up 75 cents? Because sometimes it was a 75-cent roll, and sometimes $1. How many times has it done this? And he went back and he detailed charted out, and he came in the next day, and I went home and checked my records, and I had done it 16 times, not 15. And he came in and said that it had done it 38 times. This stock had rolled up 38 times. Now, it only hit the $4 peak. Remember, don't get greedy. Thou shalt not glean the field. It's the same thing. Instead of trying to sell it at max, you try to get that little roll range where you can make money right before the peak, and then you can make a whole bunch of money. Remember the meter drop. You're making money repetitiously. Okay, that is rule number 2. Rule number 3 is to do this rolling stock strategy with the I'm going to say cheaper, but with the cheaper stocks, with the less expensive stocks. Now think about it. If this little company goes from 2.5 to 3.5, you make $1. If Motorola goes from $50 to $51, you've made $1. Now, obviously, you can buy a lot more stock in the lower price ranges. Now, there's a lot of stocks. Oh my goodness, the Microsofts, the IBMs, there's a lot of stocks that are rolling, you know, from say 106 to 115. And there's stocks that are rolling from 118, 119 up to 130. There's a lot of stocks that have 4, 5, 6, 7, even up to $10 rolls and really establish nice patterns. But the problem is they're too expensive. Now, a little bit later on in this video, I'm going to show you very briefly how to do rolling options on rolling stocks, and that'll be a brief presentation. But right now, rolling stocks, we stay with the less expensive stocks so we can buy more of them. Now, I'm going to show you some charts. These are just some, I just had my trading department yesterday pull these off. This is a little company called, well, this was Drug Emporium. You see this one here, the stock goes down right around the $4 range, and then it goes up around $4.75. But you see it rolling here? It comes down around the $3.90 range, or $3.75, and then it rolls up to the $4.75 range. You make about 75 cents to $1 on this roll. Then it goes back down, rolls up, goes back down, and rolls up. Okay, I'll just keep showing you a couple more of these, so you can kind of see what a rolling stock looks like. Now this, by the way, is Telechart 2000. We use that service, TC 2000. Any one of you can subscribe to this. You'll find their advertisements in financial magazines and newspapers everywhere. Here's a stock that goes down to right around $2, about $1.93, $1.98, and it goes down to $1.85 here, and it goes up to about $2.30, back down, up, down, and you just repetitiously make money. Okay, here's another one here. This is a little technology stock, a health medical instrument stock. This stock goes down right around $3, and it goes up to actually about $2.85, and then goes up to around $3.35, $3.50. Up, down, up, down, up, down. Now, a minute ago I said that you have to do a certain amount of money. If you're just doing this with $200 or $300, the profits are going to get eaten up with the commissions. You need to have about $1,000 to get started in rolling stock, and it would be good to have even $1,500 or $2,000. So before you just run out with, say, $200 or $300 or $400, you may want to save up a little bit more and have about $1,000, because you need to buy low and sell high. You need to buy them at 2, sell them at $2.75, whatever, make 75 cents on the raw. I'll just show you a couple more so you can see a pattern. Here was a stock that was kind of low in the low $1.80 range, and then all of a sudden it spiked up to around 3, but then it came back down to 225, 3, 225, 3, and it's back down to 225 right now. This is a rolling stock. By the way, this is Southland Corporation. This is one that had all the 7-Elevens I mentioned a while ago. Okay, here's another roll. This is a Data Broadcasting Corporation, and this stock goes up around 7, and it goes back down. Now, you see all these little patterns right here? I mean, you could make money on all of those if you were really detailed and really careful, but that's not what I'm talking about. I'm talking about establishing a roll pattern like this. Okay, and here's another one. This is another retail apparel store. Then this stock goes down around the low 4s and then the high 4s. Low 4s, high 4s, and it's back down into the low 4s again, right? So that is what we call rolling stock. Again, your stockbrokers will call it channeling. Now, this was my first way to make money in the stock market, and it really bailed me out of the financial morass that I was in, because I was able to repetitiously make money and then go get a check and pay my bills. So when I say treat the stock market like a business, it has a lot of meaning to me, because I learned some of these strategies and designed these and worked on these formulas and worked out the bugs and got all these things worked out, so by the way, that you don't have to make all these same mistakes. You see, what is the value of that? I mean, I just mentioned a minute ago about experiential learning. What is the value of following somebody who's been there before? I mean, can you just imagine going out crossing the West without a guide to take you there, somebody who has been there before? What is the value of that? Don't get me wrong, I've made a lot of mistakes, and I lost a lot of money in the stock market with different kinds of strategies until I worked it out and I figured it out. And so you can use my experiences to learn. You can read my books, and by the way, I've got, you know, dozens upon dozens of people have read my books, but I can't even count the people. I can't even begin to count the people that are retired, that are just have quit their jobs or staying at home, moms that were, we had one lady that had like $3,000 that she had to start. Her dad loaned her another $5,000, and she's making between $8,000 and $11,000 a month. And she wrote me this really nice letter, said, I've got 3 little kids at home. My husband walked out on me about 2 years ago, and I've got 3 little kids under 5 years old, and now I'm able to stay home. I want to be home and be a good mother to my kids. And she doesn't have to go get a job to support her family because she's able to do this on these kinds of strategies where she's repetitiously making money.
And January the 21st, I came to my first Wall Street workshop, and I would have to say this has been a life-altering event for me. My life has never been the same.
What's neat about this outfit is it exposes everybody, no matter what income level you're at, what personalities, what type of people you are. It brings everybody in. It has a common denominator. They all want to be successful.
I really didn't know a great deal about the stock market until I got involved with Wade, and once I started reading his books and attending some of the seminars and stuff, what I was able to acquire knowledge-wise was, you know, it's priceless.
Now, learning this rolling stock strategy gave me the luxury to find other strategies where I could cash flow the stock market. Now, again, remember, cash flow, tax write-offs, and growth. I'm still after more cash flow. Rolling stock is wonderful, but sometimes that even takes too long. It takes sometimes 3, 4, 5, 6, 7 weeks for it to roll up and roll back down. Well, then I was introduced to options. Now, I've got to start off by saying that options are very, very risky. They are not for all of you. Matter of fact, options should be a trade that you do with extra money. It's money that you can lose. It's money that it's not your grocery money. It's not your retirement money. So, for example, if you have $100,000 to invest, you would take $2,000, $3,000, $4,000 and do these riskier trades. Now, don't get me wrong. Once you learn about options, you could lessen the losses. You learn, and then you minimize the risk. That's a very common strategy. You go through this learning curve. I recommend that you get and read this pamphlet. It's called Characteristics and Risks of Standardized Options. You can get it from your stockbrokers or call the Chicago Board of Options Exchange. It's a great little pamphlet. I read it. I learned a lot from it. It will explain to you the risks and rewards of options trading. Now, what I'm going to explain here now is about options. This is a stock option. Now, there are 4 different kinds of options: interest rate options, index options, and foreign currency options. We're not talking about those. We're talking about an option. An option is the right, not the obligation, to buy or sell a stock at a set price on or before a certain date. Now, that was a long sentence, so let me repeat it. An option is the right to buy a stock. It's not an obligation. You can lose your money, but you don't lose anything more than what you have at risk. An option is the right, not the obligation, to buy or sell a stock at a fixed price, at a set price, on or before a certain date. Now, that date is the 3rd Friday of the month. Technically, by the way, it's 11:59 a.m. Eastern Time on the Saturday after the 3rd Friday of the month, but the stock market's closed. It closes on Friday. So the options expiration dates are Friday. So if you're buying an October option, that option expires the 3rd Friday of the month. If you're buying a January of next year option, then that expires the 3rd Friday of January. You can buy options 1 month out, 3 months out, sometimes even 6 and 7 months out. You buy the right to buy a stock. So how do you do this? You pick a strike price. You pick a price, and that you want to buy the stock or sell the stock at. There are 2 types of options. There is a call option, and there is a put option. A call option equals the right to buy the stock. A put option equals the right to sell the stock. Now, when you buy a call option, you're hoping that the stock goes up. When you buy a put option, you're hoping that the stock goes down. Now, let me show you how this works. Options are always in 100-share increments. So when I say 75 cents, you're going to buy a contract which is going to cost $75 because you have to take this times 100. So 75 cents times 100 is $75. That will give you 1 contract. If you wanted to buy 10 contracts, that would be $750. Now, what would you own? If you had 10 contracts of this times 100, you would have the right to buy 1,000 shares of that particular stock at whatever price you've agreed to buy it for. Now, so again, let me put some real numbers to this. Strike prices start at $5, they go $7.50 and up to $25 in $2.50 increments. Once they hit $25, they go in $5 increments, $25, $30, $35, $40, $45, $50, and on up to $200. And then they go in $10 increments over $200. So let's show you how this works now. Let's say that you really like a stock. The stock has been around $60 a share, and now it has climbed up to $80 a share. You really like it at 80, and you think it's going to even go higher. It's got good earnings, a lot of newsy things coming out about it, and you really like this stock. You call your stockbroker and you say, how much is the $80 call option going for? Now remember, a call is the right to buy. Let's say out 1 month or out 2 months. And your stockbroker says it is $4. And you say, okay, I want to buy one contract. Well, one contract at 4 times 100 is $400. If you bought 10 contracts, that would be $4,000. And that's what you have at risk. Now, if the stock goes up, let's see what happens here. Matter of fact, let's do a comparison like this. Let's say that we have on this side right here the stock, and we have over here the option. I'll say a sentence right now, and then I'll give you an example, and then I'll explain the sentence and say it once again. When there is a small movement in the stock, there is a magnified movement in the option. Let me say that again. When there's a small movement in the stock, either up or down, there's a magnified, on a percentage basis, on a corresponding basis, there's a magnified movement in the option. Let's see how this works. The stock is at 80. Now, you have the right to buy it at 80. This is an $80 call option. And right now, the option is worth $4. The stock goes to 82. The option goes to, say, $5. The stock is at 84, and a lot of this depends on the time left before the expiration, but just catch the theory of this. 84, the option goes to, say, $6. Now, if the stock's at 84 and you have the right to buy it at 80, your option has got to be worth at least the $4. That is what is called the intrinsic value. But your option goes up to $6. The stock goes to 86, and your option goes to, say, $8. Now, think this one through. Remember, there's a small movement in the stock. There's a magnified movement in the option. The stock has gone up not even quite 10%. It's gone from $80 up to $86, $87, and the option has gone from $4 up to $8. So you have a 10%, not even quite a 10% move in the stock here, but you have a 100% move in the option here. Do you see how that works? Kind of fun, isn't it? Because now your $4, let's say that was $4,000, in a matter of a day or two, or 2 weeks, or even 2 hours, your $4,000 has turned into $8,000, and bam, you're out. You just call your stockbroker anytime you want, and you say, you know, I have those $80 call options, and I want to sell them now. Now, let's talk about the negative side of this. If this stock goes down from $80, let's say, down to 78, down to 76, your $4 option is going to go down to $3, down to $2. And by the way, if you don't do anything by the expiration date, and if that stock stays under $80, what is your right to buy it at $80 worth if the stock's at 78 on the expiration date? See, it's not worth anything. And you would lose your whole $4,000 or your whole $400. So again, you shouldn't be doing options unless this is your riskier money. But if you really think that this is going to go up, you call your stockbroker, you're looking at the charts, and you really think that this stock has a lot of potential, then a call option may be the place to be. By the way, if the stock is at 80 and you think it's going to go down, you would buy a put option, and as the stock goes down, the right to sell it to someone, to put it to someone at $80 would go up. Now, I'm not going to do puts. I don't do a lot of puts. I do a lot of calls. So I'm going to stick with call options right now, and I'm going to show you how these two things work together. I would like to marry up two strategies. And by the way, we do this at the Wall Street Workshop. We teach options, and then almost immediately we teach stock splits, companies that are going through stock splits. It's really two different strategies, but as we mix them together, it becomes one, because we're going to do options on companies that are doing stock splits. Now, there are 5 times to do them. I'm going to list them very quickly right now. One is pre-announcement. They run in packs. All the oil stocks will do stock splits as the stocks get high. All the bank stocks, then all the high-tech stocks. They run in groups, so you can almost guess which ones are going to do splits. Stock split at certain times of the year. Stock split every 12 months or every 15 months if the price gets up, say, about to $100. There's a lot of times that you can get involved in stock splits even before they make the announcement that they're going to do the stock split. So that's pre-announcement. Number 2 is on the announcement itself. And I got a lot of problems with this one, because unless you get there right away, like within 12 or 14 seconds, the stock's going to go, as soon as they make the stock split announcement, the stock's going to run up to $83, $84, and then a day or two later, it's going to be right back down to $79. And you have a tendency to lose here. So be very careful with strategy number 2, which is on the announcement. The third time to get involved, the third strategy is between the announcement and the time that the stock actually does a split. Sometimes it's 4 weeks, sometimes even 10 weeks. Then the stock has a real fluctuation going on between those times. The fourth time to get involved in a stock split is right on the day of the split. Let's say it's going to split on a Friday. You have 100 shares of this $80 stock, and on Monday, it's going to reflect in your account. When you call your stockbroker and say, how much of that stock do I have? They'll say, you now have 200 shares at $40 each, if it was a 2-for-1 stock split. So that is is called the split date. The fifth time to get involved in stock splits is like 2 or 3 days later, and then thereafter. Any time after the stock has actually done the split, that $40 stock may climb back up. Now, I'd like to show you some charts here. And I'm going to show you this first one, which is Coca-Cola, and that's the $80 example that I'm using, and I'll come back to this one in just a minute. But here's a company that has done a stock split, and this was about 1.5 years ago at the time of this video recording, and the stock was up around the $80 range, and you see right here this big gap right here from here down to here, and it went down to $41, $42, and then it started its climb back up. Okay, that was Coca-Cola. Home Depot is a great company, right? And the stock did a stock split a little while ago. It did a 3 for 2, and the stock went down. You see it climbing right back up again. Look at this. It climbs up. It does a split down, climbs right back up. It does another split, and it's right down here in the bottom right now, and hopefully it's getting ready to go right back up again. Okay, here is Amazon.com. Did a stock split, climbed right back up. Here is Cisco Systems, which is another great company. Virtually anybody getting on or off the internet has to go through some Cisco product, right? So here's a stock that was around 82, did a 3 for 2 down to $50 and climbed right back up. It's $103 a little over a year later. Okay, here's Southwest Airlines, by the way. Southwest Airlines, ticker symbol's LUV. Stock got up around 36, did a stock split down 3 for 2 down to $22, and it's climbed right back up. So look at this trend here, split, and then look at this trend here. Okay, here's Safeway. You want a good, solid company all around America? Here's Safeway. Stock got up around $61. About $55, and did a split down to 2 shares at $26, $27. Here's the one split, and then climbed right back up to about $70, split down to 2 shares at $35, and here it is climbing right back up again. That is a typical stock split. Now, technically, we want to say, well, these stocks do these splits about, and they go back up to the original price about every 3 or 4 or 5 years. I can't even believe how many go right back up to the original price within 6 months or 9 months or a year. As a matter of fact, I'll make you a challenge. You go out and find a company that's done a stock split, and 1 or 2 or 3 or 4 years later, the stock is not back up to the original price. If you can find one, you could probably find 1 or 2, because I found a couple. But if you can find 1 or 2, I'll show you 40 or 50 that have gone right back up to the original price. Now, think about my challenge there, because going right back up to the original price, if you got a $120 stock, and it does a 3 for 1 stock split down to 3 shares at 40, and 2 or 3 years later, that stock is right back up to $100, $110, $120 a share, then you've tripled your money. Nice move. Okay, here's Conseco. This is a big insurance, accident health insurance company. Stock got up to around $73, and it went down to 3 shares at 37. So here's the split, climbs right back up. Now, these little bars right here on this graph are 3-month bars, from here to here to here. So it's like 9 months later, the stock is right back up to $73, $74 again, does another split, and it's kind of floundered around a little bit because the market's been so weird this year. But look at this. Within 9 months, it was back up to its original price. Look at this one. If this one doesn't get your blood pumping, I suggest that you check your vitamin dosage, because this one is exciting. This is Dell Computer. Dell is an awesome company. Matter of fact, I've commented lately that if I had to sell all my stuff and own one company, I'd own Dell. I think Dell is a wonderful company. The stock got up to around 115 back here. This is like in the last part of 1996. It split, climbed right back up. It split, climbed right back up. It split, climbed right back up. Last summer, when Dell announced its stock split, it was around $90. 1 month later, before it actually did the split, the stock had climbed up to almost $180, $179. It doubled in value in about 4 weeks. And then it went back down to 2 shares at $80 or so, climbed right back up to 110, did another stock split, and now it's going through another stock split. Okay, here's Microsoft. Microsoft has a history of stock splits. This is a stock split at the end of 96, climbed right back up, 98, climbed right back up. This is an amazing company. All right, here's America Online. Stock split, climbs right back up. I mean, I just don't know how to tell you anything that gets more exciting than this, okay? Now, what I'd like to share with you is how to marry up these two strategies. How we take the power of investing in companies doing stock splits and marry that up with options, option trading, call option trading. Now, I want you to think about something first, though. About 90% of the time that a company announces a stock split, it also announces an increase in its dividend. Now, what is that? That's the money that it divides out and pays out, its profits that it pays out to its shareholders. What effect does that have? See, not only is it going through a stock split, it also announces an increase in its dividend, which also has a positive effect on the stock. So that $67 stock that climbs to $82, $83, $84, and then it does the split. A lot of good things happen, usually on announcement, right around the stock split time. So let's see how this works now. And this is very, very exciting. So I'm going to go through it. I want to go through it slowly. I want to explain it so that you at home can watch this and maybe have to rewind it and watch it over again, because this is so darn exciting. The company I was telling you about a while ago was Coca-Cola. That $60 stock that had climbed up to $80. It is Coca-Cola. The ticker symbol is KO. The stock was around $80, $81. It had gone up to 84, 85, backed off to 80, and they announced that they were going to do a 2-for-1 stock split back here when the stock was around $64, $66. The stock was at 80. I called up the stockbroker and I got those $4 options, right, which I spent $4,000, and actually I spent a lot more than this, but I want you just to see one 10-contract trade. Now what do I have again? Let's do a little review. I've spent $4,000 and I own the right to buy 1,000 shares of Coca-Cola at an $80 strike price out about a month or two. Now they made the announcement in April and May, and the stock actually split I think in the end of May or June. Now when the stock splits, the options split. Remember, I have purchased 10 contracts here. Now watch what happens. When the stock splits, and I think it got to about 82, the stock is going to go down to 2 shares, in this example, at $41. But now my options split. Instead of having the $80 call option, I now have the $40 call option. And instead of having 10 contracts, I now have 20 contracts. Okay, let me say it again. I now have more contracts for the right to buy Coca-Cola at $40. Now just take a little time out here. Would you rather own 100 shares of Coca-Cola at 80, or would you rather own 200 shares of Coca-Cola at 40? I think the answer is obvious. Because once the stock splits, then a whole bunch of people can jump back in. People can afford a $40 stock that maybe can't afford an $80 stock. The company is usually doing very, very well. But what drove the price up here? It's not just because it's doing a stock split that we're playing this. We're playing this on great companies that are making lots of money. And by the way, that's the underlying thing for building a great portfolio, is to invest in great companies making lots of money. Well, here we are with a great company making lots of money, announcing an increase in the dividend, announcing all kinds of good stuff, expanding around the world, its market share. It's earning a lot more money, by the way, overseas now than it's making domestically. Coca-Cola is doing very, very well. It's got worldwide recognition. Now, what do you have? Now you have 20 contracts for the right to buy Coca-Cola at $40 a share. Now, do you remember when I said the stock goes from 80 to 81 to 82 in our last example? Now, look at this. As Coca-Cola goes 42, 43, 44, our option. By the way, remember when the stock splits, the option split? Well, so does our cost basis. Our cost was 4, now our cost basis is 2. Let's look at the chart. Let's see what happens now. Here's what happened. Coca-Cola split. The stock went down to the 40, actually it kind of goes off the chart a little bit, down to $41, $42, and then it just started this climb right back up. Now let's see what actually happened. I sold part of my contracts that I had at $4,000. Remember, I had 10, but now I had 20. I sold 10 of those contracts at $7, which is $7,000, and I sold 10 of those contracts at $9, which is $9,000. So my $4,000 turned into, in about 3 or 4 weeks, into $16,000. Now, I get triples and quadruples not that often, but they're also not that impossible to get if you do a right trade at the right time. I get thank you letters in from a lot of people that have done these option trades, and they make good money. Listen to this one. The Wall Street Money Machine is the only book I've read and made money. Between June of '97 and July of '97, I made over $9,000 on a $4,000 investment. How do you do that? How do you take $4,000 and within a month turn it into $9,000? Well, you have to do it with some form of leverage. Now think about this leverage. It's leverage, what we call proxy investing. You're not buying the stock because, see, once again, Coca-Cola went from $80 down to 2 shares at 40, and those stocks went back up to, say, $44, $46, and $47. I would have got a nice 10 to 20% return, not a double, tripling, and quadrupling of my money. Can options be very risky? Yes, but they can also be very, very profitable.
I love to play the options. Options are a big factor of my trading.
We thought these things are out there all this time, and we really didn't know really how to make the money. We've been working in the market and making a little bit of money, but to be able to expand on that and perfect that, that's what really excited us, and we were raring to go.
There's some awesome ways to make money out there in the options market.
have a doctor, by the way, that contacted us, and he'd come to our seminars and gone to the Wall Street workshop, and he started with $30,000, then put another $40,000 into his account. Now, this guy's an anesthesiologist. He's a doctor in a firm of 8 people. He's been able to quit his whole practice because he was gone from his family all the time. He took $70,000 and in about 9 months made $2.3 million. Now, do you understand when I make a statement like that on this video? Are you going to make that kind of money? Probably not. Can you? Yes, but these are exceptions, by the way. These are real exceptions when somebody takes $70,000 and makes $2.3 million. I get in a lot of trouble and criticized all over the place when I tell people that they can double some of their money every 2.5 to 4 months. I've never told anybody they could double all of their money because it'd be too hard. It'd be like taking a big, huge boat and trying to move it through the water where you get a little personal watercraft like a wave runner. You can move those very quickly with small amounts of money. But this gentleman took $70,000 and made $2.3 million. We have one lady from Russia. She came here. She could hardly speak English. She finally saved up enough money to come to our Wall Street workshop, and she's making like $5,000, $6,000, $7,000 a month. Her biggest problem right now is her husband from Russia loves this country so much he wants to pay all this money in taxes, and she's now coming to our other tax and asset protection seminars to learn how to save the money. And she said, by the way, in her letter to me, I wash toilets. I clean bathrooms for a living, and I had to clean all these bathrooms 10, 12 hours a day to get enough money so I could start trading. And now I'm making all this money, $5,000, $6,000, $7,000 a month in the stock market. See, that's what I'm trying to get across, is how to build up that perpetual monthly income. You know, you've all heard the expression positive mental attitude, or PMA. Well, that's not what I'm talking about here. I'm talking about PMI, which stands for positive monthly income. And if you come to our seminars and our workshops, you might forget this from time to time, but I will never forget this. I will never forget that what we're trying to help people do is to spend more and better time with their kids, to spend time with their families and give more to their church and build up the kind of income that will truly support them. And that's what we're talking about, again, turning the stock market into a business. What do you need to quit your job? What do you need to stay at home and make this kind of money? Well, it's knowledge, but it's not just knowledge that you learn and have it go away. It's the application of knowledge. It's gaining wisdom, if you will, and actually doing the trades. Now, I encourage all of you to paper trade. Do this over and over and over again. Don't cheat, by the way. Buy a stock, sell it. Buy an option, sell it, and get good at it on paper before you use real money. Now, this is called paper trading or simu trading. By the way, at our seminar, we're going to teach you how to do that. See, you've all heard the expression, practice makes perfect. Hogwash. You can practice something wrong all day long and you still have it wrong. Perfect practice makes perfect. Now, what do you need? Knowledge. I'm reminded of the story of Albert Einstein. He was 77 years old when he died, but at the age of 75, he was being honored at a New York banquet. And they walked in, there was this pretty young lady, his hostess sat him down for the evening, and she's like 18 years old, and they're up at the podium saying all these really nice things about him. And after a while, this young lady looked over and said, well, what do you do, sir? And he looked back at her and he says, well, I'm engaged in the study of physics. And she looked back at him and said, oh, physics. I studied that last semester. Now look at the difference in their answers. Here is the most renowned physicist in all the world, and he did not even say, I'm a physicist. He said, listen to the power of his answer. He said, I'm engaged in the study of physics. May I suggest you try that on for size? When somebody asks you what you do, you say, I'm engaged in the study of, and then put in whatever it is that you do. Well, I want you to know as an instructor that I am engaged in the study of cash flow and how to maneuver the stock market and the different formulas so that you and me can build up income to support our families. I've been able to buy a beautiful home and cars and all that with stock market profits. What do you want? Do you want more income? Well, let me show those of you right now another strategy. But remember, it is knowledge. It is knowledge. What is the difference between somebody that's making $50,000 a year and somebody that's making $80,000 or $100,000? It is their level of expertise. What is the difference between somebody making $100,000 and somebody making $300,000 a year? It's the application of knowledge and their expertise. I make really good money, but I don't make as much as Bill Gates of Microsoft. What is the difference between Bill Gates and Wade Cook? Well, he has knowledge that I don't have. If I ever wanted to make that kind of money, I would have to learn what he knows and then apply what he knows to make that kind of money. What price are you willing to pay? Remember a while ago I said that a lot of you don't deserve being rich? Well, I hope that this tape gets you on the right track to learning the kinds of information, the kinds of formulas that you need so that you can apply these things and get on with making money. Knowledge. Knowledge. I'm going to finish that off, by the way, by saying that you need to get to be an expert at one of these. Now, I mentioned to you, by the way, for example, that we have 11 different strategies at the Wall Street Workshop, 7 of them major strategies, 4 are minor strategies. You need to come there and learn all 11 so that you know that they exist. And then you say, I really like this one, or I like this one. I'm going to do maybe 1, maybe 2, but you get to be an expert. You pick the one that you want. If it's options on stock splits, then you pick exactly that time that you want to get involved. You know your exit. You get involved, and you do it exactly the way it's outlined so that you can start making cash flow. Put the emphasis on the exit strategy. Now, for a minute, I would like to address those of you that already own stock in the stock market. This is a very, very important strategy. It is called writing a covered call. I'm going to go through and explain it, and again, I'll show you how to get involved if you don't own any stock, but how to get involved for those of you that do own stock. Let's say that you bought a stock a few years ago at $31, and it's taken a year or two, and that stock has climbed up to, say, $38 a share. Do you know that you can buy calls on this stock, but you know that you can also sell calls on this stock? You can sell calls. So you call your stockbroker and you say, how much is, say, the next month out, how much is the $40 call going for? Now, it could be anywhere from 50 cents up to $3 or $4, depending on the volatility of the stock and all that, because there's a whole options exchange that handles the pricing of this. Let's say that your stockbroker says, well, right now, the call is going for $1 by $1.25. And you say, and let's say you have 1,000 shares. You say, I want to sell 10 contracts of this call option. Now, what does that mean? You would sell 10 contracts, or in this case, you would sell and take into your account $1,000. Now, let me explain this again. You have a stock that's at 38. By selling a call, you are agreeing to let somebody buy this stock from you at $40. Now, if you don't want to sell it at 40, then you should not write a call. Now, let's explain the term write a covered call, and we'll come back to this example and explain it once again. The word write, anytime you hear the word write, W-R-I-T-E, in the stock market, it means to sell. So if I say write a call, it means to sell a call. Now you've got to be saying, what is this? Because before we were talking about buying a call option, like on Coca-Cola. Now we're talking about selling or writing a call. A call is still a call option. The word covered means that you actually own the stock. You're covered on this position. So if you write 10 contracts of this option at $1, you're going to generate into your account $1,000 cash, and you'll get that money in your account tomorrow. Now, why would you do this? Well, obviously, just for that $1,000. You would do it to generate income from stocks that you already own, kind of like rental stock, if you will. All right, what have you done? Let's go back and explain it again. By writing a covered call at the $40 strike price, you have agreed to sell your stock at $40 if and when it gets above the $40 price. Under what scenario would that happen? Well, the stock has got to go above $40. So if the stock rises from 39, 40, 41, 42, on that expiration date or any time before that, you are going to get called out, which means that you're going to get that stock taken away from you. Now, hopefully you're selling it at a profit. If you bought it at 31 and you're now selling it at 40, that is a $9 profit. If you have 1,000 shares, that is $9,000. But you also now get that $1,000 for writing the call. That is income that you generate. Now let's go to the other scenario. Let's say that it doesn't go that high. Let's say it goes 38, 39, 39, 50, backs off to $39, and on the expiration date, the stock is right around $39. You do not get called out. You still own the stock at $39, but you get to keep the $1,000. That is yours. That is income that you generated for locking down somebody else having the right to buy your stock at $40. This is called writing a covered call. It is not impossible to get between 18% and about 30% monthly returns in writing covered calls. I will now show you the formula. And by the way, this is one of the safer formulas. You can even write covered calls in an IRA. If you have a brokerage account opened up and that's where you're with your IRA, and you have stocks in there, you can call your stockbroker and say, I want to write covered calls. Remember, they're in 100 share increments. Quick point, from now on, you should always buy your stock in 100 share increments because you can write covered calls. But if you have 115 shares, that 15 is just kind of wasted. You can't write covered calls on that. All right, the rules for writing covered calls, the formula. Number one is to get those kinds of returns I just mentioned, you'd have to do it on margin. Now, margin means debt. It means that if you have $5,000 cash and you put it into your account, you will be able to buy $10,000 worth of stock. How do you do that? Well, your stockbroker is in fact going to loan you the other $5,000 and use the stock that you would buy with that $5,000 as collateral for the loan. You have to pay interest on that, and you should not use a lot of margin. Be very, very careful with the debt that you incur. Remember, debt is a killer of businesses. So you don't want to do a lot of margin, but if you want to get the higher returns, you have to take a little bit more risk. Number two, you want to do this on stocks that are quite volatile. You want to do this on stocks, number three, that are, say, between the $5 and $25, possibly the $30 range. All right, let me give you an example now. So there are the three rules. This is your range that you want to be buying and doing covered calls in. Now, do you remember a while ago I said we want to buy stock on dips or weakness and sell on strength? All right? In writing covered calls, listen carefully as I do this. In writing covered calls, you want to buy the stock on dips or weakness, and you want to sell the call on strength. Let's say that you have a stock that is going from, say, $8 up to around, say, $11 or $12. And a month or two later, it goes down to $8 again, or $8.50, and it goes back up to $10. You with me on that? And this establishes a little roll pattern. Now, you could, if you want to, you could buy the stock at $8 and sell it at $11, but here's another strategy. You buy the stock at $8. Let's do 1,000 shares just to keep this simple. At $8, that would be, in this case here, that would be $8,000. But remember, you're only going to have to put up half of that if you're doing this on margin, so you'd have to put up $4,000 cash. As the stock goes from $8 and it starts its climb up to, say, $9.50 or $10, you would sell the $10 call. We're going to write a covered call. Let's say your stockbroker says that that is going for right now around $1. Well, you have 1,000 shares. That would equal then $1,000. $1,000 cash that you generate into your account the next day. What have you done? You've now sold to someone out there. You don't know who this person is. You sold to someone the right to buy from you this stock that you just bought at $8, a couple weeks later, the right for them to buy it at $10, to take it away from you at $10. Now, you wouldn't do this on a stock that you think is going to go from $8 up to $20 or $30. Why would you give someone the right to buy it from you at $10 if you've got a $15 or $20 stock? Well, the reason you're doing it this time is because you've seen this roll pattern, and it only gets up close to 10. So you're selling a call to generate income on stock that you own that you bought at $8. Now let's look at the rate of return here. You would take the rate of return, if you don't get called out, you would take the rate of return at $1,000, divide that by the 4,000, and you have in this example a 25% return. By the way, what happens if you get called out? What happens if that stock goes from the $8 up to, say, $11, and you get called out at $10? Remember, you had written the $10 call. Well, you get to keep the $1,000, but now you bought a stock at $8, and somebody buys it from you at $10. And 3 days later, after that third Friday of the month, that Monday, and then on Thursday, you're going to end up with an additional $2,000 in your account. In this case here, you have $3,000 profit on a $4,000 investment. A nice rate of return. A nice rate of return. Writing covered calls is my second and third most favorite strategy. Now, we don't have time on this video to talk to you about all the different strategies, but I'd like to just mention them very quickly. When you come to the Wall Street Workshop, and I hope that you're making a decision to come, because I'm hoping you're seeing these strategies and how you can put them to work for you. I like writing covered calls so much. In the 2-day Wall Street Workshop, again, the immersion learning, just get away from the phones and get away from everybody and just get there and learn and see these transactions being done. Remember the 3-step process. We tell people how to do it, we show people how to do it, and then we watch over them while they do it. Writing covered calls usually occupies, depending on the day and what's going on in the market, between 4 and 6 hours of the 2 days. I like it so much. We spend a lot of time on the options on stock splits. That's 2 different strategies that we put together. We have one of the minor strategies, blue chips, investing in great companies that are making lots of money. My favorite strategy is selling puts. Doing bull put spreads and selling puts. Now, a put, again, is the right to put the stock or to sell the stock to someone else. By selling a put, I'm agreeing to let somebody put the stock to me. Don't have time to explain it here on this video, but we spend time on selling puts, which, again, I think is this an awesome strategy, selling puts in the Wall Street Workshop. We talk about bottom fishing, finding those little $2 stocks that have the potential to go to $50 and to $100. I hope that you give some serious thought. let me once again reiterate what the Wall Street Workshop is all about. We want to take people through a course that will be very, very meaningful to them, that is results-oriented. Is that what you want, by the way? Because let me ask you something. If you want a class that is all about fluffy, feel-good, how to be one with the universe, motivational type stuff, don't come to our class. If you want a class that is all about time management and how to get a day planner and all that, don't come to our class. Those classes are necessary, they're needed. But this is an industrial strength class on the formulas that consistently produce income. If that's what you want, then I recommend that you come.
I had been through many seminars that claim to give you incredible results, and I was a little disappointed, so I came in skeptical. After going to the seminar, I had a little bit more confidence in what Wade was doing, and so decided to give it a try.
Nobody else teaches the same concepts or teaches you anything as in depth about the market as he teaches you.
The positive results that I gained from the Wall Street Workshop canceled out any skepticism I had before.
We are having an absolute crazy marketplace this last year. By the way, I cut my teeth in 1994 in a marketplace that was kind of flat and going sideways, and I really like this. See, when a market's going up and up and up and up and up, we never know when to get in. It doesn't present any buying opportunities. When the market goes down 300 or 400 points in a day, then we can jump back in and we know all kinds of things to write it back up. By the way, that's another strategy, is learning what we call peaks. When the stock peaks out, buy put options on it or sell calls, and then when it slams down to the bottom, it's getting ready to go back up, maybe what we call a dead cat bounce, then that's when we buy calls or sell puts on it. So whether the market's going up or down or sideways, I think we've proven here that you can make money in any type of marketplace as long as you have these formulas in your brain, ready to go to work for you. That is what the Wall Street Workshop is about. Again, it is 11 different strategies. 7 of these strategies are what we call the major cash flow. These are the income strategies, and 4 are what we call the minor strategies. Of the 7 major strategies, we go through the 3-step process. Again, there are technicians there, great instructors who walk the walk. Matter of fact, if I got a problem right now with my company, it is simply that I have a hard time keeping instructors. They make so much money that they'll come to work for me for 6-9 months, and I just get them trained to be a great instructor, and then they're making $20,000, $30,000 a month, and they don't need to teach the class anymore. They're making so much doing the deal. So they quit, spend more time with their families, which is wonderful. I'm not criticizing them, but that is the problem I have, is getting and keeping great instructors. So when you come there, you're always talking with people who walk the walk and are doing the deals. You know what? These guys are exciting too. But I would rather, myself, I would rather sit in a boring seminar with somebody who really knows what they're doing than a really exciting seminar by somebody who's never done a deal. These people are doing the deals. So when they're explaining them to you and you have questions and you've got concerns, they're there in the marketplace every day and they know how to answer your questions. The Wall Street Workshop. Yes, you can get my books, and I'm going to go through several of my books right now so you have a good understanding of what is there. I wrote Wall Street Money Machine several years ago. It's been on the New York Times business bestseller list for many, many months, about like 18 months. It's been on every bestseller list in the country, called Wall Street Money Machine. There are 4 chapters in here on writing covered calls. There are 2 chapters on options on stock split companies. This book is about building up income, creating a money machine for you. When I finished writing this book, I started writing another book. Because I thought I was done, by the way, but then everybody kept asking questions. I got invited to a lot more radio and TV talk shows, so I wrote a book called Stock Market Miracles, basically, by the way, to prove that there's no miracles on Wall Street. There may be miracles on 34th Street, but not on Wall Street. And it's designed to show you the income that you can generate. There are 4 chapters in here on the real fundamentals, on basic fundamentals, and then I wrote Bear Market Baloney to show people how to get ready for a bear market and that you don't need to be afraid of them. There is 1 bear market for every 3 bull markets. Now, a bear market definition is a market that goes down about 20%. Stocks are declining in value. A bull market, obviously, then is the opposite, where stocks are growing in value. The average bull market lasts between 3 and 5 years. The average bear market only lasts like 9 to 11 months. So where are you going to gear your strategies? Where are you going to learn how to make money? Now, you can make money in a bear market. That's why I wrote this book. Getting ready for a bear market and having the right kinds of stocks as you head into one so you'll pull out of them very easily. And then the other strategies. By the way, my staff thinks that this is the best book that I've written on the strategies that will help people make a lot of money. Now, these are the stock market books that I've written. I've written another book if you want to get a whole synopsis of everything that I've ever done. It is called Wealth 101. One of the best books that I think I've ever written is called Business by the Bible. I was quoting some of the things from it today. It's called Business by the Bible, about learning the secrets of the ancients. And let me tell you why this is important to me. I wanted to be very, very rich. I've got a lot of things I want to do with my life in sponsoring and supporting youth programs and a lot of other really great things that I want to accomplish, and those things require a lot of money. So I started looking for the people that I could follow, the people I could take advice from. One of the questions I used to ask in my real estate seminars was, how many of you want to make $100,000 a year? And hands would go up all over the audience. And then I would say, well, if you really want to make $100,000 a year, why are you talking to anybody about making money who's making under $100,000 a year? To whom are you listening? Where are you going for your advice? Now, I make millions of dollars a year. To whom are you listening? The average CPA makes $52,000 a year. The average attorney makes $58,000 a year. The average stockbroker makes about $45,000, $46,000 a year. To whom are you listening? Where are you going for your advice? So then I had to take my own advice. If I wanted to be rich and make tens of millions, even hundreds of millions of dollars, where am I going to go? So I started looking all over in books and everywhere I could go, and guess what I found out? That the richest people who ever lived are not alive today. They were alive a couple, 2,000, 3,000, 4,000 years ago. You could take, by the way, Abraham and Isaac and Jacob and all the land that they had, move that forward to on an inflation-adjusted basis, and Bill Gates and Warren Buffett could not even buy, well, they could buy a fraction, but a small fraction of what those guys owned. Those guys had wealth, flocks and lands as far as the eye could see. So how did they make it? And what was their relationship with God? And that was important to me. And that's why I wrote Business by the Bible. I've written 2 other books based on the Bible. One is called A+, and another one is called Don't Set Goals the Old Way. I hope you get these books. I have 4 books on real estate. The Real Estate Money Machine that I explained, which is buying and selling properties. Real Estate for Real People, which takes a really good old-fashioned look at real estate and all the things you can do. How to pick up foreclosures, and 101 Ways to Buy Real Estate Without Cash. And also I wrote a book called Brilliant Deductions. I wrote this book over a 7-year period of time on Nevada corporations, charitable remainder trusts, living trusts, pension plans, getting your estate set up so that you're not only making a lot of money, that then you're keeping and preserving and protecting that money for your retirement. So, and we built our whole company around this, by the way. Our company is about 5 different things under Wade Cook Financial Corporation. It's a publicly traded company. The ticker symbol is my first name, WADE. Our company is about 5 and now 6 things. Number 1, to show people how to make more money, either in the stock market, in real estate, or in business. Number 2, to show them how to lower their exposure to risk and liabilities. Number 3, to help them prepare for a great retirement. Number 4, to help them reduce, lower, and hopefully eliminate some of their taxes. And number 5, what we call bequeathment. How to pass along in a tender, loving, caring way all their assets, all the wealth that they've worked so hard to build up. And then number 6, to do all of these with biblical standards. This is the 6-fold nature of Wade Cook Financial Corporation. And again, for you, what does this mean? It means that you have a company dedicated to helping its students get results. What we relish, what we glory in is when we get these letters and people are making all this money, they're able to quit their jobs and adopt kids and stay at home and take care of them. I love those kinds of letters. Well, we want to make you a success story. We want you to build up the income that you want. Now, what I'd like you to do right now is to call our 800 number. It's 1-800-872-7411. I'll put it on the screen so you can see it. 1-800-872-7411, and say, when is the next Wall Street workshop? And by the way, right now, at the time we did this video recording, we had a really, really great special. We'll keep it on as long as we can. Matter of fact, the special, the pricing, the tuition for the class is so hot that, I can't even mention here, melt the tape if I told you what the pricing was. It's just too hot. So you call the 800 number and say, we have tuition discounts and we have travel discounts available. We want you in the Wall Street workshop. You need to be there. Because what are you going to do? I remember in Arizona there was a hospital company, and on their commercials they said, well, if you don't get help from us, get help somewhere. The problem is I look around again, there's nowhere else to get help. Your stockbrokers and everybody else that touches you after you come to a course, they get something out of what you do. So let me tell you what you're not going to get at the Wall Street Workshop. You're not going to be sold investments at the Wall Street Workshop. That's between you and your stockbrokers. We are pure educators. We want to show you how to make this money. And number 2, we don't get anything out of what you do. When I talked to you about a doctor that took $70,000 and made $2.3 million, he didn't pay us 5%. He didn't pay us 10%. He paid us a tuition for coming to the course, and he gets to keep all of the money, and you will get to keep all the money that you make by coming to the Wall Street Workshop. This is a great class. I'm doing this at the very end of this presentation. It's important to me. I hope I can make it important to you. Right now, we are teaching between 13 and 15 Wall Street workshops around the country every week. We're selling out classes everywhere. So you're going to have to call right away even to get a seat, and it's probably sold out a lot of the ones. You may have to wait 3 or 4 weeks to be able to get into a class. Right now, around 32% of everybody sitting in the course is there as a referral by somebody else who has been there. People come and they make so much money they can't wait to get home and tell all their friends about it, and then they get their friends or their family members to come. Some classes we have up to 40% of all the people there are referrals. You show me another company that has that kind of referral rate, where the customers go home and they're so excited about what they've learned and they've found so much value. Boy, I tell you what though, this is the most expensive course you'll ever take, but I hope that it is valuable to you and you get the results that you really want. Isn't that what it's about? Cash flow, tax write-offs, and growth. What do you need more of? Here's a gentleman that wrote me a letter. His name is Larry. Please add my name to the myriad of thank yous Wade gets every day. Got a statement from my broker today and have realized a 90% profit in 28 days. It can't get much better than this. When I attended the Wall Street Workshop in Amarillo, I had $2,000 in my account to trade with. Today, my buying power is $30,000. Listen to this one. This is kind of funny. Previously, I had only learned how to store my money in the market. I've since made $5,000 since the 2 weeks since the Wall Street Workshop. Now my money is out of storage and working for a living. I like that one. Get your money working for a living so that you can quit working so hard for a living. I've got letter after letter here of people. Here's one. Wow, what a ride. I netted over $3,500 in just 2 days during the workshop. Not bad considering I had only set up my account a few weeks before, but that's only half the story. Thanks to both the workshop and the timely information I get off of the WIN network. Now the WIN network, Wealth Information Network, is our computer bulletin board service. How would you like to look over my shoulder every day and see things that I'm doing? Me and my instructors, me and my trading department, to watch the trades that we're actually doing. That is called our Wealth Information Network. It's on the internet at wadecook.com. Now you can get the old stuff off there, but you need to subscribe to get the new information on a timely basis. And also, when you call up the 800 number, ask them about our audio cassette course called 0 to Zillions. This is a 16 cassette course with manuals that go with each one of these things. Wall Street Money Machine is included in 0 to Zillions. It'll show you how to get started basically from scratch and how to make a lot of money. Right now, again, at the time of this video recording, we are including 0 to Zillions with the Wall Street Workshop. I do day trades, small roller stocks under $5, making over a 500% return on most of my trades. Just for the record, using your guidelines conservatively and only spending 1 or 2 hours a day trading and managing my accounts, I have seen the net value of my investments nearly triple over the last year. In addition, we've been able to get completely out of debt and increase our charitable contributions 5-fold to our church. I love these kinds of letters. I have to admit that sometimes it seemed too easy, but then I must also admit that when I became to think it was easy, it was then that I made the most mistakes. Has this ever happened to anyone else? Thank you for being so willing to share what you have learned and be willing to share with others in your unique way and sincere way of doing things. From my point of view, Wade Cook Seminars' growth is attributed to the dedication and expertise of your staff, as well as the validity of your investment strategies. It is a pleasure to deal with a company that walks the walk. The Wall Street Workshop filled in all the blanks. I love that statement. Matter of fact, I'm going to end this presentation with that. There are so many questions and so many concerns that people have. If you need a good, solid way to make more money, to make a difference in your bottom line, to get cash flow that you can actually take and spend, then come to the Wall Street Workshop. Again, call the 800 number on the screen. I'd love to see you there. Thank you for taking this time to watch.
You know, I was just like every other working stuff out there, you know, paycheck to paycheck and just trying to scratch out, you know, a nickel and dime here and there to put away for a rainy day.
I mean, I couldn't go on more than trading the time that I had for the dollars. Wade Cook taught me that that's just not the way to do it. You don't trade time for dollars. You let your dollars do the working for you.
It's worked, and we've made a lot of money just in the last 3 days last week.
My wife and I, we have more time together. We're able to go and visit our family more often and go to do the things I love to do.
Using it as my means of income, I've been able to live in a place that's a paradise, actually, and use the strategies to continue to live there and, you know, not have to work so hard.
Hello, thank you. Thank you. Well, it's nice to get an applause with our stock price down a little bit, but we'll be addressing that issue in just a few minutes. First of all, I'd like to thank all of you for coming, and let me tell all the audience at home that's watching this on a video presentation why this meeting came about. A few weeks ago, in the middle of August, we had our actual shareholders meeting, our annual shareholders meeting in Lake Tahoe. It was a great meeting. We had about 250, 300 people there, and we had a wonderful time. And I gave a presentation, and for the first time, I really spelled out the mission of the company and a lot of forward-looking type things that we're getting ready to do to help build up our company, to show everyone in the world what we're doing. And a lot of people said, wow, we'd like to get this on video. We'd like to send this to all the shareholders who are not here. So what we did is we lined up a studio. We came in. We've got 1, 2, 3 cameras. We got a camera up above when I write things down here. And we're going to spend some time now recreating the shareholders meeting so that all the shareholders who couldn't make it and all of the other people that want information about our company can watch this video and find out what we're doing as a company and where we're going. So again, we welcome you here for this meeting. And by the way, all the people here in the Pacific Northwest, I'm assuming all of you are shareholders of the company, correct? So we invited shareholders to come in to be at this meeting also. So it's kind of like a second annual shareholders meeting, and again, we welcome you. First of all, I'd like to introduce our board of directors. Cheryl Hamilton, who has also been with us for quite a while and been on the board for the last few years. Cheryl is also the head of our whole publishing empire, which involves Lighthouse Publishing, Buckaroo Books, Aspen, and Gold Leaf Press, and Origin Books. So she has quite a job and a great staff that works with her on that. One of our newest members of the board that was just elected is Mr. Burr Klein, who I've known for a number of years, who has been in the life insurance industry for a long, long time, and he's a welcome member of the board because he has a lot of business experience, and welcome, Burr. Next to Burr is Robin Anderson. Robin is one of the first employees that I hired here in the Pacific Northwest when we moved up here from Arizona, and she's been with me and a key person with the company for a long, long time. And Robin is also right now in our sales management department and does a great job there helping all of our salespeople. We have about 140 in-house full-time and part-time salespeople, and Robin helps with the management of that whole department. Sitting next to Robin is Robert Hondell. Robert has been with the company for a long time, and he has just been great with the company. He was our sales manager. He is currently heading up quantum marketing, which, as we get into this a little bit later, I will show you how we have our Winvest centers, our Get Ahead bookstores, and the whole sales department that we're opening up in regional and local locations all around the country, and Robert Hondell is heading up quantum marketing. Sitting next to Robert is Laura Cook. Laura Cook is my wife. She's been with me a long time, and Laura has been a trusted friend in this business. She really understands this business, has been with me back when we were doing like even $6,000 to $10,000 a month, went up to $100,000 a month, then up to millions of dollars a month, and up to tens of billions of dollars a month, and Laura's been there every step of the way. And she is my wife, and we've had her on the board now for virtually since the inception of when we took the company public. So this is our board, and there are 3 members of the board who are not here. We have 2 members of the board that live in the state of Hawaii. One of them is Eric Marler, who is a CPA and has just accepted the position of being our new Chief Financial Officer. And he'll, on part-time right now, flying back and forth from Hawaii. He'll be coming on full-time in a few months. Another gentleman that has just accepted a position on the board of directors is a gentleman named Mr. Dan Ditto, and he is the president of a corporation there, has about 75 employees. He's a lawyer, very, very respected, and we've really had a nice opportunity to have him on our board, and he's accepted that position, and he is also on our board. And we also have another gentleman named Nick Detman. Nick is a gentleman farmer from the state of Hawaii. He also has a flower farm, you know, those Hawaiian flowers, and he does that. He has about a 26-acre farm there, and he's also a pilot for Delta Airlines. So those 3 people are not here, and I'm also on the board of directors. So there's 6 here, plus me, plus the other 3. That makes up 10 members of our board of directors. Anyway, thank you for being here. Thank you. What I'd like to address here at the shareholders meeting is some of the questions and concerns that a lot of people have about where our company has been, where it's going. We have this little opportunity here with this pulpit the way it is for me to have a camera right above us to draw some things out here. I'd like to go through some different ideas with you and to show you where the company has been. And then more importantly, to address the issue of where we are going. We have built a company right now that is doing over $100 million a year in sales. What it's going to be this year, I'm not really certain. It could be 120, 140 million. We have, you know, a good few months left before the end of the year. And as I go through this process of showing you where the company has been and where the company's going, We need to address one issue, that I may make some statements that have to do with certain projections or certain things that may or may not happen in the future. I may have really good intentions, for example, of buying a company, and I may even mention it here in the shareholders meeting, but then the deal might fall through, or that company might not pan out. It might not generate the kind of income that we hope it will generate. So there is a statement that we have. It's called a forward-looking statement, and I would just like to read it so that we have this on record, that we have addressed this issue, that certain things that I may say may or may not come to pass. So here it is. Certain statements made or incorporated by reference from time to time by Wade Cook Financial Corporation contain, in quotes, forward-looking statements, out of quotes, within the meaning of the Private Securities Litigation Reform Act of 1995. Forward-looking statements include any statements that may predict, forecast, indicate, or imply future results, performance, or achievements. Forward-looking statements involve risk and uncertainties, which may cause actual results to differ. Investors should not place undue reliance on forward-looking statements as a prediction of actual results. So that's the statement. Now we have that out of the way. Let's deal with where we've been, and then we'll deal with where we're going. We have built a company over the last few years that it has a tremendous growth pattern. In order for you to understand some of the problems we face today, I would like to address where we've been. We started this company and took it public in 1995, but the company's origins are way before that. In 1993, when we moved the company up and formed United Support Association, which later became Profit Financial Corporation, which is now Wade Cook Financial Corporation, in 1993, we did about $780,000 in sales. In 1994, the company did about $2.8 million in sales. Now, please don't quote me on all these numbers, because about this time we changed our year end from January 31st to December 31st, and I'm using one set of numbers. And the financial statements, if anybody wants to get the actual numbers, could go into our filed financial statement with our SEC filings and find out the exact numbers. In 1995, we did $7.4 million. In 1996, we did $46.5 million. And in 1997, the year just passed, we did just under $105 million. Now, any company within a 3 to 5 year period of time that grows from under $1 million in annual sales to over $100 million in sales obviously has certain challenges and certain things that it must face. Growing from this type of a company to this type of a company doing over $100 million obviously requires a whole new level of expertise. One of the things I teach in my real estate seminars and my stock market seminars is that acquiring wealth, building up and growing into wealth, requires a set of skills, but it's a whole different set of skills than what is necessary to preserve and protect that same batch of assets. We have grown a huge batch of assets that really are designed to produce cash flow. Another thing that I've taught in my seminars for the last 18, 19 years, and you'll see in all of my books, is about cash flow, tax write-offs, and growth. From my earliest real estate days, trying to show people the benefits of real estate, cash flow, tax write-offs, and growth. It is something that I live, it is something that I breathe, it is something that I thrive on. When I started this company and took it public, I just didn't do a company that's going to produce income-producing assets. I wanted assets that also produce tax write-offs. I wanted assets that grow in value as you hold them. Therefore, we're investing in hotels, and in oil wells, and asphalt companies, and real bread and butter businesses. Why? Because all these businesses add to our cash flow, tax write-offs, and growth. Now, I'm going to tell one other negative thing that happened in my life many, many years ago. I had a business that was specifically was designed to teach real estate seminars. Well, when the real estate industry took a dive in the middle of the 1980s, the business suffered immensely. We literally went down the tubes with this business, and I had to walk in one day and tell 35 trusted and loyal employees, I'm sorry, I cannot pay the bills. I'm going to have to let you go. That was many, many years ago in the middle of the 1980s. I said to myself, never again will I have to do that. Never again. I am going to diversify so that I do not have all of my business interests in one little narrow spectrum of the whole business market. I want to have a variety of businesses. While Wade Cook Seminars, which is a division of Wade Cook Financial Corporation, is the biggest moneymaker. It is the business that we have that generates all the cash that we can take then and put into oil wells and into hotels. It is with that desire in mind to never have to let people go or never have to shut down a business that I do a lot of what I do. So I'm building this business based on my own experiences, and my own experiences say I want a diversified cash flow, tax write-offs, and growth business. And as you see the assets that we've accumulated, I hope that you as shareholders will agree that we are building a substantial company, a company that will grow into hopefully a billion-dollar company over the years, and that's what we're working on building. So I'd like to address these issues that have been a concern to a lot of people. Obviously, our stock is not performing today the way I wish it was performing. It is down compared to what I think it should be. Now, I'm not going to tell you exactly what it should be, but I can tell you my opinion, which I'll address later on. But it's under where I think it should be at the current time. And why is that? Well, one of the reasons that it has been down is because the last few quarters, our sales have been a little bit down, and our net profits have been a little bit down. Now, come with me, if you will, and I want to show you some things that I think everyone needs to understand, especially when you have a business based on a big part of the business based on fundamental teachings of the stock market. You have, if you have a business in the stock market, and let's say I'm just going to show you a small business. If you have a small business that's doing, say, $20 million, that's not that small, but $20 million, and let's say it has $18 million in expenses, and this company then is doing $2 million. Now, based on the amount of shares that it has, let's say it has 20 million shares outstanding. So in this case here, 20 million shares outstanding, you would have about, quick, Cindy, help me, 10 cents a share of earnings. Now, it depends on what the stock is trading for. If the stock's trading at $5, if the stock is trading at $10, or if the stock is trading at even $1, the income can be rated as a percentage of what the stock price is going for. A lot of you have heard, if you've been to my seminars, hear the term price-earnings ratio, or PE. A typical company on the New York Stock Exchange is trading at 20 times earnings. A lot of companies on NASDAQ are trading at 40 times earnings. A lot of the companies that you're hearing about today that, you know, the stock market going up and down like it has recently, companies that are really got big names. A lot of you subscribe to some of their service, some internet stocks and things like that, are trading at, I'll give you an example. One of the major internet stocks right now is trading at 130 times earnings. 130. Other ones are trading at 400 times earnings and 600 times earnings. It's just so phenomenal that some of these companies are trading at such high multiples. But a group of Americans is willing to pay this incredible high price to get at some of these stocks in companies that are just not earning that much money as a comparison. The price-earnings ratio, and we have to deal with that too. When we have a lot of profits going to the bottom line, then our price-earnings ratio goes up and our stock price all follows suit, and it goes up. When our earnings go down, then our stock price goes down a little bit too. But why is it going down, and what are we doing with that money? See, one of the reasons that our stock price has gone down is because we are acquiring a lot of companies. Now, when you acquire some companies and they make money immediately, then you can take those profits directly to your bottom line. However, what if you acquire a company that doesn't make money right now? A company that you're bailing out, a company that's really a good company, it's just had some bad management, and you want to get involved, turn it around, have it make a lot of money, and then bring those profits to the bottom line. Let me give you an example. We've acquired 3 publishing companies. One is a regional book publishing company for religious books. Another one is a nationwide publishing company, and another one is a publishing company for children's books. Matter of fact, I'll give you an example. This company called Buckaroo Books is just coming out with a brand new book called Encyclopedia. This is a book that we think is going to sell hundreds of thousands of copies. It's just a great book. This is a wonderfully put together book to teach people, to have people learn about the animals that Beanie Babies are centered around. So this is Buckaroo Books. We also have Lighthouse Publishing. Now, the Lighthouse Publishing, the company we started, has been making money. But the companies that we took over, the publishing companies and a book distribution company, were not making any money. And I see that in the next 3 months, maybe the next 6 to 9 months, we'll finally turn those companies around and get them making money. But now look at this. We have profits coming to the bottom line with our main company, but we have losses from some of these other businesses showing up over here and detracting from the profits that we're making here. Well, as you build a company and you diversify, there are going to be those times when you're literally trading your cash flow, your hard-earned assets that are actually net profits, and then you put them into enterprises that will play out over a period of time. I'm sure that all of you have done that. A lot of you have invested in different enterprises, different stocks even, in different companies, where it takes a while for those companies to start producing a profit. We are no different than that. We're investing in companies for the long term, companies that we think will stand the test of time. Another reason I think that, and this is a problem that we're working on right now, another reason I think that our stock price has gone down is because we had a very unusual situation in the fall of last year. Two things happened about a year ago. We were growing very, very nicely. We were doing $6 to $8 million a month. It went up to $8 to $9 to $10 million, $10, $11 million, then up to $13 million. As we looked at $13 million in sales, we said at that point in time, what would it take to have this company grow to $20 million a month? To literally do about $1 million a day in sales. If we grow to that level, and we're right on target, this whole progress, right on target to grow to that level, if we grow to that level, what will we need? What will we need in the accounting department? What additional salespeople will we need? What will we need in credit card processing and all the different functions of the business to be at a $20 million a month level? And through the fall of last year of 1997, we hired on about 100 new people. We took our employee count from about 480 almost up to 600 people, getting ready for a huge growth spurt to take us up to that $20 million level. And then the other thing happened. Well, several things happened. The stock market in the month of October had some wild times, and our sales are kind of related to what the stock market does to a certain extent. And then also, with my books hitting Business by the Bible, as soon as that hit the streets, we started getting a level of criticism that I didn't think possible. By writing a book that was based on scriptures, based on ancient wisdom, I had no idea the kinds of negative comments that would come out of the woodwork and the different people that would attack us. And I got criticized by people in some major newspapers. I got criticized by magazines, and I was always criticized by people who have never read my books or have never been to my seminars. We did have one lady that came to our seminar from Lifestyles magazine. Now, this is just an excerpt from the magazine. Actually, it's a reprint. And I hope you have a chance of reading this. It's about the Wall Street Workshop. And she came to our Wall Street Workshop and then wrote about it. And it's just a wonderful article. And I said, this is kind of fun now. Have people who actually come to our seminars and then write about what goes on there. And they see the wisdom that's there. They see the great strategies that are being taught. They see people making money. They see a lot of great things. But we always get these pot shots from people who have never been to our seminars, who have never read my books. So, and I don't mind being criticized, by the way, by people who have been there. But that level of criticism started, and it caused our sales to not go up. There was just a kind of a ripple through this Wade Cook thing, and it affected us deeply. Now, with that happening and the sales not going up, we were left with about 100 people working for the company, too many. 100 people, too many. Now, what to do? This shot our payroll up a lot. Do I let all these people go? We had them on for several months. We were looking at Christmas time of last year. Do I let them go, or do I just work through this problem? Am I willing to take, for the long term, a stance and just make it happen, or do I just let everyone go in the short term so that the books will look better, so that the quarterly reports will look okay? And I've decided in running this company that I am going to build a company for the long term. We will take on these additional investments, we will take on these additional employees, and we will work with them until we make it happen and we grow through our problems. That's just a personal decision that I made as president of the company and as the chief executive officer, to not let that group of 100 people go. And by the way, I don't even know if they appreciate it. But we at management know what a struggle it has been to have an additional payroll, to have 100 people when the sales went down a little bit and didn't go up that whole bunch that we were planning on. So now we're poised. Now we're ready to go. We have in place right now trained, great, loyal employees that are poised to do over $20 million a month. And we would hardly have to hire on any new people, maybe 4 or 5 more people added on to the 580, 585 that we have right now to grow into the next level. We're ready to go. We're ready to go. Now we have a great opportunity with bringing on some extra people. Let me tell you another criticism that I had during this time. As we did our financial statements and we did our quarterly filings with the SEC over the last several years, one of the things that we kept just kind of sticking out was that Wade Cook's name was everywhere. Wade Cook was the author. Wade Cook was the promoter. Wade Cook was the speaker, the instructor at all the seminars. And everybody said, well, we own stock in this Wade Cook Corporation. What if something happens to Wade Cook? What if he gets sick? What if he passes away? Then what would happen to this company? So we started addressing that question, that problem, several years ago, which was to take on additional speakers. Well, we had great speakers already working for us that were teaching my seminars, and they were developing strategies, so we started publishing books by these. You see all my books across the front here. Let me show you 4 books. that are by other speakers. One of our speakers is a gentleman named J.J. Childers. Here's his book called The Secret Millionaire, and he has another one coming out called Millionaires, H-E-I-R-S, Millionaires, and it's a great book on asset protection. Here's a book by John C. Huddleston called Sleeping Like a Baby. I've read this book. This is a great book on how to guard and protect your stock market investments. This is a book called Blueprints for Success, which is kind of a team book written by all these different authors. And here's a book by Greg Witt. Most of you know I like rolling stock, and he's become an expert in rolling stock his own little way, and he has a book called Rolling Stock. These are in bookstores everywhere. So we're addressing the issue of other people. And we have several other speakers that are developing their own seminars, developing out more books. You're going to see a whole array under the umbrella of Wade Cook Financial Corporation and Wade Cook Seminars and Lighthouse Publishing. You're going to see a whole array of books, seminars, home study courses that we put out by other speakers. By the way, right now, we are not that far away with the income that we're generating from these other seminars of having that income even surpass the income we're generating from doing the Wade Cook seminars under Wade Cook Seminars. So that's what we're doing to address that problem. Now, we've initiated a process of beefing up our management level. We have hired on 3 vice presidents. Mr. Carl Sanders to be vice president of business development, Bruce Couch, who I'm going to have come up and address us in just a few minutes, and Eric Martyr, who I mentioned before, who is on our board of directors, and our CFO to be a vice president of the company. These 3 vice presidents are going to help me with all the different divisions of the company, taking companies public, as you'll see in our Abacus program. I'm going to explain in a few minutes, helping out with the existing seminar business, all the marketing, and all the things that we're trying to do, so that if I do take a couple weeks off or a couple months off, that the company will run smoothly. I say right now that we're probably 6 to 8, maybe 9 months away from having the company being managed by a grouping of vice presidents that will really understand the business. I mentioned Mr. Eric Martyr, who is a CPA and coming on as our new Chief Financial Officer. He is currently in Hawaii, getting ready to move over here, but he has some great comments to make about the direction of this company, what he's going to do as our new Chief Financial Officer. So go ahead, please, Eric.
Thanks, Wade. As Wade mentioned, my name is Eric Marler, and I'm currently in Hawaii as the CFO of a property management and utility company. And I'm excited about the offer of CFO that I received from Wade a few months ago, and I will be transitioning to full-time duties with Wade Cook Financial Corporation in December of this year. I'm really happy to be joining management and the board of directors in moving this corporation along toward achieving the mission statement that Wade has laid out. Many of you have experienced some concern over the tightening in our margins over the past couple of quarters. I want you to know that I'm also a shareholder of the company, and I've experienced that same sort of concern. So there's some perspective that I think that we should try to achieve before we talk about what I plan to do as I come over full-time. First, as we look at the financial statements, one thing that you don't get to see are the future plans that we have. We've made a significant investment in our people and our operations, and that investment doesn't show up as an asset on the balance sheet. It shows up as an expense in the income statement, which tightens those margins down and causes us to appear as though our earnings are thinning. And for a short time, they will thin as we prepare to invest in the future. Secondly, Wade has mentioned the Abacus program. Many of the investments that we have made in our real estate business, our oil business, and other operating subsidiaries are young. And we're looking forward to a time when we will enjoy the mature profitability and cash flow that we know that can come from those businesses. So direction of a company sometimes can almost be more important than what a set of financial statements say currently about a company. Wade asked me to share with you the 4 overall objectives that we in the finance division of Wade Cook Financial Corporation have set for the future. First, we are in the process of preparing a full-blown operating plan, including operating budgets for all departments of the company, so that all of the employees in the company will be able to understand in accounting terms, in profitability measurement, how what they do fits into the overall mission of the company. This will greatly assist the company in achieving its profitability objectives. It's been said by someone that when performance is measured, performance is improved, and I'm a great believer in that principle. Second, we will retain our strong focus on sales and increased profitability as the way to grow our company. This is a prudent and a conservative growth strategy, and we feel it will put us in a good position in the future to build toward that billion-dollar company that Wade has talked about. Third, we're in the process right now of implementing a huge new management information system put out by a company called SAP. We're excited about the possibilities for better information that we're going to receive out of that system through understanding better, for example, the relationship between the dollars that we spend on advertising and the amount of overall sales we generate as a product of that advertising expense. And there will be many other relationships that we'll be able to derive from what we're doing in the company simply through having better information. And finally, we will retain a strong focus on nurturing our investments through the Abacus program to bring about the profitability and increase cash flow that we're looking for. These four objectives, as we work through them and as we implement them over the next 8, 9, 10, 12 months, will significantly bring us along to increasing profitability in the company and increasing shareholder value. So, I look forward to joining the company, and I look forward to seeing you at our next shareholder meeting. Thanks for investing with us.
Thank you, Eric. I hope that we can all see that as you come on and we help build this company together, that we're going to build a great financial dynamo. So what I'd like to do right now is to have Mr. Bruce Couch come up. Bruce and I have known each other for a number of years. As a matter of fact, I used to speak for him. When I first became a public speaker 18 years ago, he worked for a company out of Salt Lake City that sponsored these big conventions and big events. Bruce was the director of seminars. He's been in the seminar business and the promotion business and marketing for over 18, 19 years, and I've learned a lot from him over the years. We're very, very fortunate this last year to have him come on as a consultant and then to come to work for us full-time, and he's just moved his family here to the Northwest. Bruce has 8 kids. As a great father, I've got to meet a lot of his kids, and he is now on with us as our vice president in charge of marketing and development and helping basically to run the whole company. He'll be our general manager of the company. So Bruce, would you please come up? Would you all help me welcome Mr. Bruce Couch?
Well, thanks, Wade. It's a real pleasure to be here and have the opportunity to talk with you for a moment. Wade asked me if I'd just tell a little bit about myself, but he basically told all about me. There's not a whole lot more to tell. But I'd just like to give you a real quick synopsis of my background and where I come from. In 1979, I got involved in the seminar business and did a lot of seminars all over the United States. In fact, in 1 year, we did 2,541 seminars. That was an average of about 8 seminars a day. So I have a background in seminars. I understand the way it works, the marketing behind seminars, and it's a great business, and it's a lot of fun. In 1980, I had this guy come into the office by the name of Wade Cook. And Wade walked in and he said, you know, I'd like to speak for you guys. And we said, all right, Wade, if you want to do that, you need to develop a book and some tapes and audio tapes and a home study course, that type of a thing. And 3 weeks later, he came back and it was done. And I was just amazed at his creativity and what he could do in such a short amount of time. Well, Wade and I worked together over the next 8 years or so, and then I got out of the real estate seminar business, and for a reason I'll talk about in here in just a moment. Anyway, I've done a lot of marketing. I love marketing. I've been involved in international marketing a lot. I've established businesses in London, England, and Melbourne, Australia. Marketing is a lot of fun. And over the years, I have learned a great deal about TV, radio, and especially direct mail. And as I look at marketing, there are 2 aspects of it. You need someone that is a real creative type of a person. Wade is that. I'm not. I'm not Mr. Creative. The other type of a person that you need is someone that's analytical, that will take what you're doing marketing-wise and analyze it and figure out if it's working or not. That's me. That's what I love to do. And the people that work with me, they go crazy sometimes because I'll always say, show me the results. What's working, what's not working. For example, you take this book right here, and you look at it and you say, it's a great title, it's a great cover, and you may look at that and you really like it. But I'll tell you something, your opinion doesn't mean anything. Either does mine. The only opinion that counts is the customer. And the customer will tell you if it's good or bad. And that's what I like to do. I like to take mail pieces, radio shows, TV shows, whatever it is, analyze it and figure out what's working and what's not working. And with the proper system, you can do that. And that's what I'm here for, is to help implement a system so that we can take all of our marketing efforts and figure out what's working. We do a mailing, and we rent 20 lists or whatever. And if you track it properly, you will find that 2 or 3 of those lists are working. The rest of them aren't. Well, if you're not doing what needs to be done, you will continue to mail those 20 lists time after time after time, and you are wasting so much money. With proper tracking and the proper system, we can get smart. We can get smarter and do much better in our marketing. Now, Wade asked me to come on here back in January. Yeah, and Wade and I sat down, and he said, I'd like you to come on full time. And I said, well, Wade, you know, I'd really rather just do some consulting right now. I got out of the seminar business a number of years ago because it got ugly, if I can use that term. And I wasn't real sure that I wanted to get back into it. I can't sell something I don't believe in. I can't be part of something that I don't believe in. Well, it didn't take me very long. In fact, it took me a couple of weeks to look and see what Wade was doing and know that he had something that the American people need. We all need it. I saw how he could change people's lives for the better financially. I believe that, and that's why I'm here, and that is the only reason I'm here. And I'm very grateful that Wade has given me this chance and opportunity to be a part of this company. And I'd just like to thank him, and thank you.
Thank you. With the direction of the company now to be a growth-oriented company, to get our sales up, to get profits to the bottom line, to continue to expand into our other investments. Now, let me talk about those other investments, and then I'll address some other issues. We now own all of, or part of, 19 different companies. We own, for example, about 17.5% of a company called No Wonder. They have a new program coming out called Friendly Family Finances, and here's one of their products. It's a software program, an interactive game for children on how to use the internet and how to use their computers called High-Tech's Hijinks. We own a part of that company. We have a company that we started up called American Newsletter Company. American Newsletter Company right now is publishing the newsletter called Explanations, which is a great newsletter, and the subscriptions are growing all the time. As I mentioned before, we have a lot of interest in the publishing industry. I love books. I love the book selling and book buying business. So we have purchased again these different publishing companies, and now we have our own book distribution company. And I want that to grow into one of the largest book distribution companies in the country. We right now are shipping out books for, I think, about 105 other publishers and authors that we are now handling their distribution. It is a great company. It has a lot of potential for growth. We have a company called Quantum Marketing. Let me address that issue with Quantum Marketing, because this is a fun company. As we go around the country and teach these seminars to people, people will come and they'll learn these strategies and they get really excited about it. But when they go home, sometimes people feel alone. They feel like there's nobody there to help them. They even say, would you please come back to Amarillo again? Would you please come back to Tallahassee? We want you there more. Because they feel the excitement of our instructors and the team leaders and all that are out on the road working with these people. But then when they get home, they may have their computer or maybe have their stockbroker, but they don't have the same passion, the same excitement that we've had. We're now opening up educational centers all across the country called WinVest. I'll show you how it is spelled. WinVest Centers is basically an alumni center where our students can go and have access to computers, charting services, diagrams, company reports. So we have different Bloomberg terminals, for example, the 2-screen Bloomberg terminal, where they can get all kinds of company reports, news from all around the world about these different companies. That alone costs about $1,600 a month. So if anyone on their own wanted to subscribe, it'd be $1,600 a month. But if we have a Bloomberg terminal at our WinVest Center, then the different students that we have can come in and log on and just use that information. We have Telechart 2000 there. We have different systems there that people can use. Then our students can hang out with other people who are actually working the stock market. Now, at the time of this shareholders meeting, we have 3 centers opened up, with 3 or 4 more scheduled to be opened up in the next few months. We plan on literally hundreds of these centers being opened up all around the country. Now, along with the centers in the same building, we are usually going to have a small, limited bookstore called Get Ahead Bookstores. And basically it is what it says. It's Get Ahead. It will have books in there on all kinds of investments, stock market, real estate, mutual funds, and all those kinds of things. It will have books on all kinds of businesses, business startup, how to raise money, anything that has to do with owning and operating a business. There will be books in there on taxes, books in there on self-help and personal development. So all those things about getting ahead, well, basically those 5 topics, we'll have books there. Usually about 2,000 to 3,000 titles will be in a Get Ahead bookstore. So there'll be a Get Ahead bookstore in the same building with an alumni center or this WinVest center along with a local sales office in that area. So we can have local salespeople that we handle now nationally at our headquarters in Seattle, Washington, will be able to be out in the local community, talking to local businesses, visiting local high schools and math classes and student bodies and giving presentations. We'll have our local salespeople just meeting with the customers on a local basis when they come in. So it's a lot more fun. There's a place to go, kind of a place to hang out, a investment lounge, if you will, where people can go and be around other people that are investing. This is all under a company called Quantum Marketing, and that company has purchased the rights, if you will, to my seminars and putting them on in those local areas and in servicing and taking care of our customers. That is Quantum. Another company that is a lot of fun, and it's going to sound weird when I say this, but I like bread and butter companies. I like just down and dirty, on the streets, making money businesses. I mean, if I could own a company that manufactures hangers for dry cleaners, that'd be the thrill of my life. And everybody says, well, that's not very exciting, manufacturing hangers. Well, you know how many hangers a dry cleaner goes through? Let me own a hanger business. That's the kind of businesses I want to own. That is about as bread and butter as you can get. Well, in northeastern Utah, it's one of the largest tar sands pit and oil reserves, like the 2nd largest or 3rd largest in the country. We have 2 operations going on in that area of the country. One of them is a company called Standard American Oil. Now, it sounds like it's an oil exploration company, but it's not. This company might do that in the future, but right now, it owns the rights to over 100,000 acres of this high tar sands deposits, and with the mixture of gravel, it becomes an awesome patching material for roads and can actually be the concrete on roads. We're right now negotiating to do the concrete repairs and pavement on military bases. This company has just started up. We own about 50% of the outstanding shares of stock in this company. It's called Standard American Oil. It's one of the companies that we're taking public. It'll become part of our Abacus program, which I'll explain here in just a few minutes. But the product is already now being distributed to like the Home Depots and Eagle Hardwares and all those kinds of stores all around the country. We see good things happening with this company. It's an asphalt company. Another thing that we've done there is to drill oil wells. I want to be in the energy production business. Do you realize that 50% of our economy is still a fossil fuel-based economy? From airplanes to house heating to cars, I want to be there. I don't just want to own stock in Exxon or Mobil Oil, which we do from time to time. I want to own the actual production of oil wells. So we had an opportunity to get involved in the actual ownership of an oil well, where this company owns 20% of one oil well. Now we're drilling our 2nd oil well. We own 20% of that. And the money that we put up, we get immediate tax deductions. We get long-term tax deductions in the fact that we only have to claim 85% of the revenue as income because of the depletion allowance. And we are looking forward to some really great revenues from our oil wells. We just had one come in, and we'll start receiving revenues in the next few months from this oil well to the tunes of hundreds of thousands of dollars a year from our investment in this oil well. That's not a company we're going to take public. Those are just investments that we own directly under Wade Cook Financial Corporation. Another company that we own is a company called Left Coast Advertising, wherein we do our own in-house advertising. We can place our own radio, newspaper, and TV advertising with our own company. And as we start to look for other customers, and by the way, we've been so busy handling our own advertising, we haven't had to go out to look for other customers. But we make money with Left Coast Advertising because we can control the placement of our advertising by having our own company that does the advertising placement. I mentioned a while ago our hotels. Now, when I speak of hotels, I mean hotel interests. For example, we may own stock in a corporation that owns a hotel or units in a partnership that actually owns the hotel. About 1.5 years ago, I started investing or taking some of the money into hotels. I did a couple personally, but most of the hotels were done under our publicly traded company, Wade Cook Financial. People ask me, why are you doing hotels? Well, remember cash flow, tax write-offs, and growth? Now, my little cliche answer I do at my seminars, when people actually say, why are you investing in hotels if you're doing all this money in the stock market? Well, then my cliche answer is, well, when I was a kid, I used to love playing Monopoly. You know, in the Monopoly, you do those 4 little houses on there, and as soon as you get the 4 houses, what do? You go to hotels. Well, that's what I'm doing. I'm now going to hotels. I did the house thing, now I'm doing the hotel thing. But with these hotels, and when I say hotels, I mean like limited service hotels, Fairfield Inns by Marriott, Hampton Inns, and those kinds of limited service hotels, a couple Best Westerns, and a Sheraton Inn Suites, and some of those kinds of products. We have purchased in our building 15 different hotels, and now we're taking those hotels and making them part of, we formed a new company called Republic Lodging, and we're putting those as part of Republic Lodging at the time of this video recording, and we are getting ready to take that company public under the name Republic Lodging. It's very, very exciting to be able to take a hotel equity and trade it for stock in this public enterprise. Also, we have attracted now several other hotel chains. We're including also now 29 more hotels, which is like about 80 or 90 million dollars worth of hotels. Another chain of 11 hotels, which is about 76 million dollars worth of hotels. Another chain of 11 and another chain of 9 have also said that they would like to come in. So these owners of these hotels would like to trade their equity in their hotels for stock in a publicly traded company. Now they have a better back door. They have a better exit strategy. They can give the stock to their kids. They can sell part of it, et cetera, et cetera, et cetera. Now, I don't need to belabor the point now. If any of you have owned real estate and you want to kind of unload your real estate, you've got to say, well, I've got to sell this whole property. But boy, if I had this as publicly traded stock, I could sell part of it, keep part of it, give my kids part of it, have part of it go to my retirement, have part of it go to my kids upon my death, and you have an exit strategy. We're just owning equity in real estate sometimes, it's pretty tough to unload. It's pretty tough to move it off to the next generation. So as this hotel company builds and grows, we're just proud to be part of it. Right now, we own a large part of it, but as we bring in all these other hotels, our percentage will go down to around 20%. Then it'll go down to 12%. But each time we take on more hotels and better cash-flowing hotels, hopefully the stock of that enterprise will go up. So even though our percentage of ownership goes down, we still own the same amount of shares of stock, and the value of each of those shares will go up. Now, our hotel company is definitely one that we're putting under our Abacus program, and I'll explain again the Abacus program in a few minutes. We have ownership and several other companies coming up. One of them is, by the way, is that we own right now, is we purchased, I think at the time, probably the 2nd or 3rd largest travel agency in the United States. Ideal Travel Concepts out of Memphis. This company has a system of outside travel agents. Right now, there are over 14,000 outside agents that are part of Ideal Travel Concepts, and we own 100% of that company. And that company can take on part-time or outside agents. By the way, any one of you sitting here could become an outside agent. Let's go ahead and put up the 800 number on the screen for Ideal Travel. So if anybody wants to get information, they can call the 800 number, and you, anyone here, can be a part-time agent. Then as you go into hotels, you could be a travel agent, have your ID, your IATA number and all that, and you could get better rates at hotels sometimes. You can get better rates at car rentals and a whole bunch of savings and things like that. Now, this is not a travel club. This is an actual travel agency. And instead of operating through a system of having different branch offices where you have rents, you like in little strip malls and all that, and have to hire on employees, they have a centralized office in Memphis, but they then hire on outside agents like us, and then we get half of the commission. So they get half the commission, that's the commissionable amount, and we get half the commissionable amount. Now, I've been a travel agent for many, many years because I do so much traveling. And that's why I was interested when this travel agency became available to purchase, that we, under our public company, would purchase Ideal Travel. And now we have 14,000 travel agents that are working for this company. This is an awesome enterprise. Another company that we have is called Information Quest. Information Quest, what we refer to as IQ Pager, and we have a system where during the day, during the stock market hours, if a stock announces a stock split, if there's earnings reports, if the market's up or the market's down, where we can just type it in a few seconds later, 10,000, 14,000 pagers go off all across the country of our students who have come through the Wall Street Workshop that want this information. They want timely information. I think all of you know this, that it's not just a matter of knowledge. It's not a matter of just of know-how, but it's a matter of timing. It's in getting involved right away when the announcement first comes out. We sometimes get the information out, not just sometimes, a lot of times, before stockbrokers even get this information. We have such a tie-in to all the quick news services in this country that by the time the information is disseminated nationwide, like on CNBC and some of these other news sources, the information is pretty old, especially if you get it from the newspaper. That's the next day before you get the information from the previous day. But in a matter of seconds, literally sometimes 60 seconds or 150 seconds, we can have an information that's going on with the company going up or down, and so that the people that come through our seminars, which have learned these strategies and have learned what to do when the stock does this or whatever the stock is doing, has access to immediate information. information that will help them make more timely decisions. That company is called Information Quest Incorporated, and we refer to it as IQ or IQ Pager. Well, that gives you just a brief outline of some of the companies that we own, again, all of or part of. I want to address a couple more issues about our stock and what we're trying to do to build it back up. You know, I think the issue that is on a lot of people's mind is that we had some losses in our brokerage account. How dare Wade Cook go out and teach all these people to make money in the stock market if he, in his own brokerage account, has stocks that are down in value and basically show up as a loss? Well, I'd like to address that issue. We have made, last year and through this year, have made hundreds of thousands of dollars on our different trades that we do in the stock market. But just like anyone else, you may have stocks that you're holding in your portfolio, just holding them, just holding them for the long term. For example, we bought Boeing stock at 50, then it goes down to around 40. Well, if you have thousands of shares of Boeing at 50 and it's down around 40, it's not that you're going to sell it at 40 and take a $10 loss. You're just going to keep it in your account and wait for it to go back up. We did not buy Boeing for a short-term play. We bought Boeing for the long term. So when Boeing stock goes from $50 down to 40, it's not that we're going to sell it and have an actual loss. What we have on the books, if we keep the stock, is an unrealized loss. Now, what we're going to do is hold that stock for the long term. We didn't buy Boeing as a quick-term play. We bought Boeing for the long term. We have many stocks like that. And conversely, if Boeing stock goes from $50 up to 60 and we keep it, now we have an unrealized gain because we have not realized the gain or the loss by not selling the stock. However, from time to time, that can look very bad in the books, but we have to go by generally accepted accounting principles, which is GAAP, and record everything for our auditors. We are, after all, a publicly traded company, and we have to comply with the way they want our books to look. And sometimes when the accountants get a hold of you, your books end up not looking too good. So even though you're making a lot of money in the accounts on a cash flow basis, sometimes it just doesn't show up that way. I'm amazed at how many people don't get that. We've got these critics from different newsletters, financial newsletters, that should know better. And we have to spend sometimes a half hour, 45 minutes, an hour on the phone with them, explaining to them what an unrealized loss is or what an unrealized gain is. Now, we are, again, a publicly traded company. Our brokerage accounts are open for scrutiny. And by the way, can I just say one more thing on open for scrutiny? One of the divisions of our company is called WIN, Wealth Information Network. We started this several years ago. People coming to our seminars, they said, Wade, how can we find out what you're doing every day? Well, we thought about doing a newsletter, but tell me, if I'm doing a trade today, and by the way, today and yesterday, at the time we were doing this video recording of this shareholders meeting, the market was absolutely going nuts. Yesterday it went down around 500 points, today it's back up 200, but you know, in the first 10, 15 minutes of the day, it opened up 100, and within a half hour it was down 119. But then I called back a half hour later, and it was up 119. It was just amazing how gyrating the stock market is. And we were making money. Today, we made a bunch of money buying a couple puts. We made some money doing some bear call spreads. We made a lot of money using our strategies in the market. Every trade that I do is recorded so the whole world can see. Tell me who else puts every one of their trades on the internet so that anyone can see what they're doing. Show me one. Boy, I would just love one of my critics to put every trade that they do on the internet so the whole world could see. So if they want to criticize me, let them walk in this Indian's moccasins for a while and put all those trades on there so that everybody can critique them. But anyway, we make a lot of money in the stock market. We've had down times, we've had up times, but the strategies work. As a matter of fact, let me tell you one of the reasons that we don't make quite as much money in the brokerage accounts as we would like to make. We have trading in our brokerage accounts, a trading department. They do a great job. We also have about 18 to 20 instructors. As they go out and teach a 2-day seminar, they'll get in front of an audience in Baltimore. Another instructor will get in front of an audience in Tallahassee, and they will, with the audience, tell them the strategies, then show them, and then watch over the people in the class while they do them. When they show them, sometimes they do paper trades, sometimes they do what we call simulated trades, and other times they do real trades. But the trading department will make that decision. When the instructor is done, after teaching 8 to 10 hours a day for 2 days, and then get on a plane to fly back home, they're tired. When they get home, they need to be with their families. But they may forget about finishing off a trade. And we have to go through and really kind of monitor these accounts. But over the years, we've had some options, for example, that have grown in value. But by the time they get back in front of a class the next week, the options are back down. Now, we're doing a better and better job all the time of monitoring the instructors, but that has been one problem, and that's one, again, because we've had so much growth, because we've had so much success in the seminar business, this growth and the success have also created their share of little negative things like that that happen, that we're trying to address on a daily basis, trying to figure them out, what we can do to better the results. I'll give you another example. I had in Ideal Travel, for example, we put the money into Ideal Travel, and I said, all right, let the world watch what I do. We have about 5 or 6 different brokerage accounts that all the other instructors and people trade on. Some of those are doing very, very well. Over the last about 8-9 months, we have put in about almost $200,000 into the Ideal account from the profits made from Ideal. Now, that account now, the last time I checked, was $386,000. Our accounting department told me that I had over a 77% gain on that for the 8 months that this account has been in existence. The difference, though, is that would be good, by the way. That would give anybody bragging rights. By the way, nobody trades on that account except for me. It is one account that only Wade Cook, and from time to time my stockbroker, I'll tell him what to do when I go in to play basketball, but that's my account. I'm the only one trading on that. That's a great return, but it's even better than this. Because, see, we opened this account last November, and I think we put in like $15,000 that month, and then $24,000 the next month, and then $14,000, and then $23,000. And each month, for the last 8 months, except for a couple when we were moving the building, we put in money into this account. Now, it's almost impossible to figure out a real rate of return when the money came into the account over an 8-month period of time. This 77% is as if all the money were placed in the account on one day at the very beginning of this transaction. Now, you can say, I don't know what the rate of return would be, but to take this much money over the last several months up to this much money, and you can see the power. And this is in a crazy market. This is what we would call in a down market. It's not really a bear market through this last period of time, but it definitely is in a very negative, downtrending market. And so we're still making money, day in and day out, making money in this account. Have we had losses? Yes, we've had a few losses in the account, but overall, you see the growth in the account. So money can be made in any kind of stock market, up or down or sideways, and that's what we're trying to show people on a daily basis. And again, every transaction that I did in that account and in my other accounts is all put on our Wealth Information Network. So I hope that addresses the issue of our brokerage accounts. I wish people could read behind the lines and see what we're really doing, and to see the unrealized losses and the unrealized gains. So an account is not as bad as it seems, and it's also not as good as it seems, because you're not really cashing in on the profits all the time. You're keeping those profits for the future. But we are building a great brokerage account to have lots of money that will support us in the different things that we want to do. So from time to time, we have to pull cash out. For example, we just had a chance of buying a stock that we made an agreement to buy over a year ago. The stock we had a chance of buying was an internet stock, high-speed access to the internet, and the company's doing fairly well. It's building up a big subscriber base, and it's doing very, very well. We had a chance of buying the stock at $1.95, which we did. We bought $500,000 worth of stock a year ago. But in so doing, we took an option to buy another $1 million worth of stock for 1 year at the same price of $1.95. And the stock's been up around $9, it even bopped up to $10, $12 for a while, and was back down to around $6. We had a chance just a few weeks ago of putting $1 million in, and I think we bought 500 and whatever that comes out to, divide it by $1.95. I think it's 512,840 shares of stock. And we were able to buy stock that was trading right around $6 a share for $1.95. Now, we own a small percentage of this company. We own $500,000 worth of stock here and $1 million worth of stock here. This stock has passed its 1-year mark. This is restricted stock, and now we can start selling the stock if we choose to. But we see this company growing for the future. So are we going to sell the stock? Yes, we may do some of that to generate cash for other enterprises. But this is a great opportunity. And by the way, these opportunities come our way a lot. They come our way quite frequently. A frequent question has come up about getting listed on an exchange. Over the last year, we have made inroads into getting our stock listed on either NASDAQ or on the American Stock Exchange. As you go through all their different criteria, you look and there's like 13, 14 different things that you have to qualify under. You have to have a certain volume of sales. You have to have so many shares. The shares have to be trading at such and such a price. We've looked at these, and we've come about this close a few times of getting listed on these exchanges. We are actively pursuing getting listed on one of the exchanges. Obviously, that would help our stock a lot, to have international exposure, to have the stock listed on NASDAQ or the American Stock Exchange. We want it just as much as you do. And we've had to go through a lot of things in a growth company like this, with the amount of shares, with all the things that are going on, And then another issue came up, which I'll address at the same time, is that we had several negative things happen in several states looking at us. By the way, one of them was the state of Texas. I just read an article this morning about Arthur Anderson being sued in the state of Texas, and they won their lawsuit. They were after an accounting firm for practicing unauthorized law. Well, they've looked at us for the same thing. When we go into Texas and we're teaching people about Nevada corporations and pension plans and living trusts, then the Texas regulators were looking at us saying, are we practicing law? And so they've done an investigation. We complied, we sent them all the information that we have, and that just happens from time to time in various states. When you go out and tell people how much money you're making, when you go out and tell people that you can make all this money in the stock market, obviously then you get everybody looking at you. I don't think, by the way, if I can use this as a comparison, but I don't think that we're that different than other companies that have done this. Most of you won't remember this, but a few years, not just a few years ago, it's been quite a few years. Do you remember when Charles Schwab came into existence? Anybody remember that? Were you around at that time? Well, all the big firms on New York, all the big stodgy old brokerage firms, and they're charging all these high commissions and all that. And then here's this young whippersnapper from San Francisco starting up a discount brokerage firm, charging 30, 40, 50% of what the traditional firms were charging back in New York. Everybody came after him. I heard he went through 5 different SEC lawsuits. Everybody criticized him. Every newspaper article, every magazine, everybody was after Charles Schwab. Now, would you think today, when you think of Charles Schwab, which is a great company, I think we have 9 different accounts at Charles Schwab over the years, do you think that anybody today would think that Charles Schwab is a rogue or a renegade, or is he pretty mainstream today? Well, he's pretty mainstream today. There's other firms that are really super deep discounted brokerage firms that may be on the fringe, but Charles Schwab is kind of like middle of the pack right now. He's become mainstream America. Well, in the first few years that we've started up and we've stuck out, and you have a company that's growing the level that we have, makes the claims that we make and helping our students make money, well, we're sticking out. And maybe as we grow and go on with our lives and just continue to help people make a lot of money, that the powers that be will see that we are a great company. They'll look at our financials, they'll look at our low debt ratios, they'll look at all the things we're doing to build up our little financial empire, and maybe in a year or two we'll be mainstream. It kind of scares me. I'd rather stick out a little bit, okay? And always be on the cutting edge to a certain extent. I want to express one other thing that we did last year that maybe will affect a little bit of our stock price. What I'm going to show you, I'm going to use an XYZ company, but it is one of our high-tech companies that has just flown. The stock has just really gone up, and I want to compare it to our company. When we went public at a little over $2 a share. Shortly thereafter, when the stock got up around $5 to $6, we did a 2-for-1 stock split. The stock climbed up again, we did a 3-for-1 stock split, and shortly thereafter we did another 3-for-1 stock split. This put about 65 million shares outstanding in the company. Now, the company that we took public owns about 35, 40 million of that. So we have, and the other companies that I have bought some more of the stock, we have about, say, 42 million shares that we control, what would be called insider stock, or stock that my wife and I own through our different companies, which puts about 23 million shares or so on the public float. Now, I want you to look at that, because that number of 23 million shares, for the volume that we have and not being on an exchange, is really a high amount of outstanding shares. It creates a public float that is probably a little bit too big for the demand that we have right now for the stock. Let me give you another example. One of the high-tech stocks, that's an internet stock, has 47 million shares outstanding, but has 40 million shares, what would be called the insider stock, and has 7 million shares on their public float. A few weeks ago, this stock was flying so high that one day there were 9 million shares that traded hands. Another day, 11 million. Another day, 8 million. Now, those of us that know about the stock market and how this really works realize that only about 30 to 40% of this stock has actually traded hands. Let me explain that. If somebody wants to buy 5,000 shares of stock from their stockbroker, say Charles Schwab doesn't have that stock available. They have to go to a market maker to get that stock. So they call up their favorite market maker and they want to place the trade, but the market maker doesn't have the stock either. They have to go to another market maker to get it. Well, how much does this show up as? The 5,000 shares now shows up as one purchase, 5,000, another 5,000, and could even be to a third market maker, or 15,000 shares. So on any given day, when you hear on NASDAQ and those types of trades on the bulletin board stocks, say 10,000 or 10 million shares trading, really probably only about 4 million shares have actually ended up in the hands of a retail customer. So just because I say 7 million shares are available on the free float and 9 million shares are traded, it looks like the whole free floating batch of stock has traded hands in one day. And it hasn't. A lot of people are buying and selling the same stock throughout the day. The stock goes to 180, and then they buy it, and it goes up to 200, they sell it. It goes back down to 183, they buy it in, it goes back up to 205, and they sell it. There are a lot of companies like that that are so volatile on internet type stocks that they're being bought and sold sometimes 2 and 3 times a day by the same people. A lot of volume. There is so much demand for this type of stock. There's even a stock, not this exact one I'm talking about, but there's even some stock in companies that are losing money, losing lots of money. Now, we're making money, and our stock's having a hard time climbing, but there are some of these companies that are losing money profusely, and their stocks are going up to 200 bucks a share. And I just don't get it at all. One of the reasons, because they have such a small float, such a small batch of stock available to the buying public. We have a large float. I was having a discussion the other day with one of our stockbrokers, and he said, Wade, you know what you really need? You need to get about 20% of that stock off the float. You need to have like somebody come in. So we've been exploring listing our stock on the Berlin Exchange and some German investors. We've been exploring a lot of possibilities with other people to basically buy up 20% of the float and just hold on to the stock. If we were to do that, and by the way, what that means is what we need is like 5,000 people. He said, this is my one of our market makers talking. We need 5,000 people to buy 1,000 shares of stock. Or we need 1,000 people to buy 5,000 shares of stock. But we need to free up, we need to dry up some of the free float out there so that the supply and the demand are more in balance with each other. And that was his opinion. But basically, it's well taken that we have a lot of stock on our float right now. And when you have a lot of stock on the float, you have a lot of supply and not a tremendous amount of demand, then the stock has a hard time climbing out of the doldrums. And that's just another reason why I think our stock is down. All right. We have, as I said before, we have been building this company and getting ourselves poised for growth. It is my contention that we need to stay the course. Bruce Couch, that you got to meet, will help us immensely. Carl Sanders, Eric Marlowe, the other people coming on in management will really help us grow this company. Now, I have shared with a few shareholders in the past and with my board of directors, I have shared what I have been trying to do for the last few years. What I have been trying to build for the last few years is a process called what I keep referring to as abacus. I don't spell abacus A-B-A-C-U-S. I spell A-B-A-K-S-S-S. This stands for acquire, build, and keep some, spin some. And that's my little acronym for that word. Let me explain what this is all about. And I started to share this with a lot of people, and they said, Wade, why don't you get out there and just tout your stock? And I says, no, my process, the way I think, is to build a great company. Go to work every day with trusted and loyal employees and build a great company. Keep our debt low. Keep our sales up. Keep trying to take profits to the bottom line. Take our profits and invest in really great other investments that will diversify. And if we do that, which we've been doing for the last several years, if we continue to do that, the stock price will eventually follow. So I haven't wanted to get on like a CNBC and tell everybody how great our company is and tout the stock, because I just want to be there every day building a great company. Now, though, maybe it is time that I take the mission and the vision of this company to the public. And this is what I shared with our shareholders in Lake Tahoe last week. And, well, I'll see your response today, see if you like it. They seem to like it. And this is one of the reasons why I wanted to do this in front of the video cameras, is to show people what I have been working so hard at building. I have great people around me, people that really understand this process. We have great outside counsel, outside attorneys that are helping us put all these deals together. Abacus, acquire a company or stock in a company. Build that company up, and then keep some of the stock, and then give to our shareholders, spin some of the stock in a stock for dividend to our existing loyal shareholders. Let me use an example, and I'll explain that process by way of example so that any shareholders will see what we have been working so hard to build up and what we're effectuating right now. As I mentioned a few minutes ago, we have 65 million shares of stock outstanding. We have about 11,000 shareholders that own stock in Wade Cook Financial, and they purchase it at all different prices. We have a company. This could be our hotel company. This could be our quantum marketing centers. This could be our new television network called WCEN, which I haven't mentioned yet. It's a Wade Cook Educational Network. We're contracting with one of the satellite dishes to have our own 24-hour-a-day educational network on stock market and seminars and things that go on during the day and look like a giant wealth information network where we're talking about the transactions, and we're looking at studios in San Francisco to headquartered out of San Francisco. And I see that as being a company that could easily do $20, $30 million a year, up to hundreds of millions of dollars a year, having our own Wade Cook Educational Network and charging people a monthly, almost like a pay-per-view. So let's take that company public in the future. Let's take our asphalt company public, or our hotels public. Let's just, for this example, call it XYZ Company. We acquire a shell corporation, a publicly traded company that has a ticker symbol. We acquire that shell, usually in a little corporation like that, to do a reverse merger and to take that company public, which basically this is how this works. We have an existing enterprise, a company that is going to make money or is currently making money, and we merge that company together with a company that is already publicly traded. So you save a lot in legal fees, and it's a very easy or quicker process to get a company publicly traded. So this company has a ticker symbol and is trading, but it has no activity, or it has had none. That's why it is called a shell. It doesn't have any activity. Then we move into that company, another company that has activity, that has a business enterprise, that is making money either now or in the future. So we acquire a shell. We'll call this one XYZ. This company usually has between 60 and 90 shareholders. That's not very many. It's not very many. And this company may have, let's say, 20 million shares of stock outstanding. And let's say that 2 million shares of that stock is held by the 60 to 90 shareholders. We then go in and acquire the 18 million shares, either by trading stock in for it or giving them cash or whatever. We end up with 18 million shares of stock. Whatever the stock is going to go and trade at, we can usually control that price for about 1/2 of 1 second. When the stock trades, the market makers then decide what the stock is going to trade for. We can say we would like the stock to trade at $1, but they could open up at $3 or at 50 cents. It really is up to the market makers then to put a value on it and then to make that available to their clients and their customers as a market maker. Let's say that this stock is trading at $1 a share when we open it up. We put in a business enterprise and the market makers value it at $1. We own 18 million shares of stock. And this is a great company. This is a company where we may have, say, $5 or $6 million invested in building up a company. One of our members of our board, one of the gentlemen that's not here, said that we are an emerging conglomerate. I love that expression. Most people don't even know what that means, the word conglomerate. We are not a holding company, even though, for example, in No Wonder, we own stock, and we would be considered a holding company in that if that's all that we were doing. We acquire companies, move in management, help them get their books set up, get consolidated with our financials or not. We take companies and help them grow into something that was not there before. We start up some companies and we acquire some companies, but we build them up. So back to Abacus. It stands for acquire, build, and then after you build up that company, keep some of the stock, and then I'll show you what the spinning some of the stock off means. Let's say that we go with our 18 million shares of stock. Let's say that we isolate off 6.5 million shares of that stock. And we take and give that stock to our current shareholders. We have 65 million shares outstanding. We're going to do a 1-for-10 stock for dividend. That's exactly what it's called, as a stock for dividend. Now, there are certain filings that we have to do on this stock. There are certain registrations we have to do, make sure that it's all approved by the IRS, and we comply with things by the IRS, hopefully so that it will be a tax-free dividend. Now, we do a stock for dividend. Let me tell you what this means. Let's say that somebody watching right now, as a shareholder of Wade Cook Financial, owns 5,000 shares. And let's say that they paid about $2 a share for that stock. Now, in a 1-for-10 stock for dividend, with the stock in this new spin-off company, they will receive 500 shares of stock in XYZ Corporation. It's really that simple. I don't want to make it complicated. Now, if you look at this, we still own 11.5 million shares of stock in this company. Let's say over the next year or two that the stock grows to $2, then to $5. And again, this definitely is a forward-looking statement because it may go down to 0. But as we continue to build this company, we hope that the stock will go up in value. If the stock goes to 3, 4, or 5, even up to $10 a share, what would happen then with our 11 million shares if we did a 2-for-1 stock split? Now we have 22 million shares. Well, then in 9 months or a year and a half, what would happen if we did another stock for dividend with some of the additional shares. And then 3 months after that, with another one of the companies that we've taken public, we take some of that stock and give it to our shareholders. Now let's see several things that will happen here. One day, this company is trading, and it has a low volume because there's not very many people that own stock in this company, and there's not very many people that even know about this company. We have 60 to 90 shareholders. One day, 3 or 4 weeks later, we have 11,060 shareholders. See, because the shareholders then of Wade Cook Financial will receive stock in this little spin-off company. What would you do? I've asked this question to our shareholders before. What would you do? Well, we know that some shareholders will sell it. By the way, when I asked for a show of hands on how many would sell the stock, not one person raised their hand. Now, when I asked the shareholders at our last meeting, maybe let's do it right now. Let's do it right here. If you had the 5,000 shares here, and you receive 500 shares of stock in this new company, how many of you would just, as soon as your stockbroker calls you, hey, you got 500 shares of stock in your account of this new company. What's this deal? Now, we're going to send you a statement of what's happening. We'll hopefully send out a video about this new company or an audio cassette so you'll get information about this new company. What would you do? How many of you would immediately sell the stock? Anybody here? There might be some people. We know that some people will sell the stock. My goodness, if it's trading at $1 a share and it's $500, that's $500 cash. That's grocery money. You can sell it and get some money. How many of you sitting here right now would consider then buying some more or getting more information on this new company? Okay? How many of you just hold on to the stock for a while to see what's going to happen with it? No, those are kind of the same hands that are going up. The people that would hold on and the people that would buy more, so it's not like a double set of hands, it's the same people. Well, that's what we're hoping that will happen. Now we have 11,000 people that know about this new company, 11,000 shareholders that are buying and selling this stock. We hope that they'll see the value. We hope that they'll see what we built into this company and want to own more stock. Well, what would happen then if we have a lot of people then wanting to own more stock and buying more stock? Hopefully that would have an upward movement on the stock, and we'll all build this company into something really good, and we'll do it together. Now, this is Abacus. Again, acquire, build, and then keep some, spend some. 3 months later, we give you stock in another company. 6 months later, we give you stock in another company. And by the way, what would happen to the value of the Wade Cook Financial Corporation stock if every few months or every 6 months or 9 months you were getting stock in all these other companies? I mean, from a dividend point of view, this can be viewed as cash. If this stock goes, if you get 500 shares and it's at $1 or $2 or $3, that's not a bad return on a $10,000 investment here. Just keep getting income from the stock distributed to you through this stock for dividend program. I mentioned before that we have to comply with all generally accepted accounting principles. One of the things that I'd like to make a comment on is the sale of one of the divisions of our company. Now, Eric will fill in more details of this from time to time in our financial statements, but what we did is we built up a division of our company. Now, when we sold this division for $20 million to a legal concern, this was a great celebration time for us. It was party time to work so hard to build up a division of the company. It was a division of the company that sets up Nevada corporations, living trusts, pension plans for people. It is a law firm that will establish its presence in various states. We're really happy that they're on with us to help co-sponsor seminars, to basically handle some of the seminars, and to conduct the affairs of helping people get their financial affairs in order with these different legal structures. It's a wonderful, wonderful opportunity for us to be in association with them to make these things happen. But it's a great deal. It's a great deal for them and a great deal for us to sell a division of our company for $20 million. But we didn't have a set payment. So talk about generally accepted accounting principles. We have a $20 million asset that our outside auditors would not let us put in our financial statements for the second quarter when the sale transpired because it did not have a set monthly payment. So now we've gone back and renegotiated a deal with them. We have a set payment, and now in our next financials it will be part of them so that this $20 million asset will come onto our books. And by the way, when you're sitting at about $46 million in net assets, then to grow from $46 million to $66 million, that is a big deal. And it was a wonderful opportunity to get that asset in and booked into our financial statements, but it'll be happening now in the near future. That company is Entity Planners, Inc., and we've sold this asset to them. I hope that by explaining where our company has been, some of the problems and challenges that we face, that you as shareholders get a better idea of what we are going through and what we're trying to do to address these problems. I hope as you see where we're taking this company in the future, by again acquiring these different assets and then sharing with you, our loyal shareholders, the direct assets in these companies by giving you stock through our stock for dividend program. I hope you see the passion and enthusiasm we have for this business. I personally love this business. Now, Our legal department is ever mindful of what I can and cannot say because we're a publicly traded company and saying things that may be out of place. But one thing they have allowed me to do is to give my opinion about the direction of the company and about where our stock price is right now. I believe, in my own personal opinion, that our stock is severely undervalued. Looking at the growth and the growth patterns, looking at the assets that we currently have and the growth of our assets, looking at our cash flow and all the things we've done to build our business, I would even say, by the way, that our stock, if it were trading around $10 to $12 right now, that would be a fair price. Now, let me put this in context. We're heading into the fall of 1998. So anybody watching this video a year or two from right now will know that I am dating that statement, that our stock, if it were trading at $10 a share or $12 a share, I think it would be fairly priced. But again, that is my personal opinion. The stock then, at its current level, is way underpriced compared to what I think it should be trading at. Now, that is my personal opinion. And there's very little I can do to drive that price up except to build a great company. And that's what I and about 600 loyal employees do every day, show up to help build a great company. So again, I want to thank all of you for coming here today. I want to thank you for being part of our company and encourage those at home to stay the course. We're going to stay the course and we're going to build a great company. So thank you all for coming. Thank you. If you're looking for a company with growth potential, we're it. As I said before, we're an emerging conglomerate where we take control of these companies and run and manage these companies. Some will be in our Abacus program. If you're looking for diversification, we definitely are a place for you to look. Think about this. We are a diversified company. We're not a mutual fund, but in some aspects we resemble a mutual fund. We have stock in other companies. We own other companies. We are a diversified company. If you need diversification in your portfolio, you could just buy stock in our company and get a certain level of diversification with just that. I invite you to share in our growth. We are, after all, a family of companies and a company of families. And I'd now like to thank you personally for watching and to wish you well in your personal financial endeavors and in all those things that will help you make your life more enjoyable and more fruitful. Thank you for watching.